The committee will come to order. Without objection, the chair is authorized to declare recess of the committee at any point. Pursuant to Committee Rule 3 and House Rule 11, the chair may postpone further proceedings today on any vote relating to any matter under consideration during today's markup. All amendments must be submitted to the committee email provided in the meeting notice. As is the chair's practice, amendments that are pre-filed will be given priority consideration. We will be distributing both hard copies and electronic copies of amendments to ensure all members have access to relevant documents in this hybrid format. Without objection, all members will have 5 legislative days within which to revise and extend their remarks and to submit additional materials to the chair for inclusion in the record. I now recognize myself for 5 minutes for opening remarks. This Congress, I'm so very proud of how committee Democrats have consistently pushed legislation that reflects our values, bills that put consumers first, despite opposition from highly paid lobbyists and big corporations that invest in communities and people who have been left behind, and that work to keep our economy safe. Today, committee Democrats are again focusing on protecting and expanding financial access, promoting community development, and caring for those experiencing homelessness. Accordingly, we will mark up my bill, H.R. 7003, the Expanding Financial Access for Underserved Communities Act, which would allow credit unions to serve communities that have been determined to lack access to capital. We will also mark up a bill led by Representative Payne, H.R. 4395, the Payment Choice Act of 2022, which would ensure that all consumers can continue to pay in cash if they choose. This committee is also continuing its effort to end homelessness and to support community development by marking up H.R. 7716, the Coordinating Substance Use and Homelessness Care Act of 2022, which was introduced by Representative Dean. This bill supports states and local governments' efforts to coordinate health care and homeless services. H.R. 7196, the Flexibility in Addressing Rural Homelessness Act, introduced by Representative Ackley. This would improve the ability of homeless service providers to serve people experiencing homelessness in rural communities. Additionally, a bill led by Congressman Cleaver, H.R. 7733, the Cdfi Bond Guarantee Program Improvement Act of 2022, helps smaller community development financial institutions access more resources to allow them to invest even more in our communities. Today, we will also mark up a series of bills focused on keeping consumers and investors safe. This includes a bill led by Representative Chuy Garcia, H.R. 5912, close the ILC Loophole Act, which would eliminate regulatory exemption that allows commercial firms to operate FDIC-insured banks as industrial loan companies, while avoiding the elevated supervision of traditional banks and ultimately putting consumers at risk. We will also mark up a bill led by Representative Foster entitled the Strengthening Cybersecurity for the Financial Sector Act of 2022, H.R. 7022. This bill would provide authority to the credit union regulator, NCUA, and Fannie Mae and Freddie Mac's regulator, FHFA, over third-party vendors which increasingly support the business operations of community financial institutions. Last year's GameStop Events highlighted the need to better protect retail investors. Accordingly, we will mark up a bill led by Representative Lynch, H.R. 7732, the strengthening the Office of the Investor Advocate. We will also mark up my bill, H.R. 7734, the Timely Delivery of Bank Secrecy Act Reports Act, to ensure Congress retains appropriate access to Bank Secrecy Act reports. Before I close, I would like to note that I have consulted with the ranking member, and we have agreed that the committee will simply transmit its views to the Budget Committee along with all signatures gathered as well as any minority views submitted. Colleagues, I'm pleased that the bills we are marking up today will better protect our financial system and ensure that communities across this country have financial access, shelter, and wealth. I now recognize Ms. Wagner, our ranking member. Mr. McHenry is not here today. Ms. Wagner will be the acting ranking member at this time. Ms. Wagner, you are now recognized for 5 minutes for opening remarks.
I thank you, Madam Chairwoman, for holding this markup. For those who are keeping count, this is our second markup of 2022. The first one in March included 4 bipartisan bills to hold Russia accountable and help the Ukrainian people. This was positive and an example of what this committee can accomplish when we work together. Unfortunately, the same cannot be said about today's markup. The bills on today's agenda are a grab bag of partisan policies. Yes, there are bills with some Republican co-sponsors sprinkled in, but let's be clear. Not one of these bills will pass the House, the Senate, or be signed into law. This type of check-the-box markup, something we typically see at the end of the year so members can go back to their districts and tout their wins. But it is only May, and frankly, the issues facing the American people are too great to be distracted by political gamesmanship. These bills do nothing to address skyrocketing prices, our broken supply chain, which, by the way, has contributed to an unthinkable baby formula shortage, or the ongoing war in Ukraine. Simply put, these bills are not in keeping with the reality of what's happening in our country right now. So let's dig into what Democrats have on the agenda today. H.R. 7022, the Strengthening Cybersecurity for the Financial Sector Act. The bill's title suggests that it will help strengthen, you guessed it, cybersecurity. Yet nowhere in the bill is cybersecurity even mentioned, not even once. The bill actually gives the National Credit Union Administration broad authority to supervise and regulate credit union third-party service providers. But it's unclear whether NCUA has the appropriate expertise or the resources to conduct this type of oversight. In the same bill, we're significantly expanding the powers of the FHFA to supervise and regulate all third-party service providers of the GSEs and the Federal Home Loan Banks, regardless of their connection to the secondary mortgage market. My question to the bill's sponsor is, what are we really trying to accomplish with this bill? Did we bring NCUA in to talk about why the authority was terminated in the first place? No. Did we bring FHFA in to talk about the bill's impact? No. We simply attached this bill to a hearing almost 6 months ago to check the box. Next, we have H.R. 4395. It's another bill that is so-called solution in search of a problem. Let me be clear, this bill is about propping up a few companies that will benefit directly from this bill, and in the process, it creates a new pathway for frivolous lawsuits in federal court. And H.R. 7716, while seemingly well-intentioned, this bill accomplishes nothing. Instead, it adds new layers of complexity and spends taxpayer dollars on local bureaucrats for the purpose of helping them spend more taxpayer dollars. If we are serious about solving the problem of homelessness, we should look to the solutions that are proven to be effective. Let me be clear. I'm not diminishing the work of my colleagues on their efforts on these bills. And as I've said many times before, committee Republicans stand ready to work with Democrats on bills that promote good policy. But today's bills do not meet the moment. They will have no impact on the rising prices, burying low to middle income families across America. In fact, they don't even address the issues that Democrats claim are causing inflation. They claim the so-called corporate greed, supply chain bottlenecks, COVID, or even the war in Ukraine, instead of the out-of-control spending that has driven these inflationary gas prices, grocery prices, and on and on. Instead, we are here checking the box so Democrats can claim a win 8 months before an election. I yield back the balance of my time.
Thank you. Pursuant to notice, the chair now calls up H.R. 7734, the Timely Delivery of Bank Secrecy Acts Reports Act. The clerk will report the bill.
H.R. 7734, a bill to amend Title 31 United States Code to require the timely production of reports to Congress under
Without objection, the first reading of H.R. 7734 is dispensed with. I have an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 7734, offered by Ms. Waters of California. Strike all after the enacting clause and insert the following. Section 1.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize myself for 5 minutes to explain my bill and my amendment. Suspicious activity reports and other materials, collectively known as BSA reports, are held by Treasury's Financial Crimes Enforcement Network, that is, FinCEN. These reports are critical for not only law enforcement investigations into criminal activity, but also for our intelligence community as they keep our nation safe from bad actors. Additionally, these reports can be essential for congressional investigations. For example, this committee has requested documents related to our ongoing investigation into the flow of illicit funds from Russia into the United States. While there is a long history of cooperation with FinCEN on the proper exchange of these records, in recent years, this tradition has been met with challenges, specifically legitimate congressional requests, for these records are simply taking too long to be answered. Moreover, given the extensive nature of SARS, offers by Treasury for committee staff to review these complicated documents in a reading room do not allow for Congress to properly conduct its investigative powers. Unfortunately, Treasury has severely restricted congressional access to suspicious activity reports by requiring congressional staff to review all material in a reading room at Treasury, prohibiting the copying of materials and restricting information collection to note-taking alone. There is no law or regulation that prohibits government, personnel, or financial institutions from providing these materials to Congress. Nevertheless, FinCEN recently informed us that it is withholding thousands of pages of responsive documents containing technical, detailed information about multiple transactions involving numerous parties. So I've introduced H.R. 7734, which requires the Secretary of the Treasury to deliver BSA reports to a congressional committee or subcommittee of the appropriate jurisdiction within 30 days of its request for such documents, and requires a financial institution to deliver BSA reports by the return date specified in a subpoena issued by a committee or subcommittee of appropriate jurisdiction. So I urge my colleagues to support this bill to ensure that Congress can obtain access to BSA reports without cumbersome restrictions that can do so in a timely manner to support its investigatory work. I yield back the balance of my time. If there is further discussion of our amendment to the amendment in the nature of a substitute.
Madam Chair,
Who seeks recognition?
Timmons from South Carolina.
Mr. Timmons, you are now recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I want to thank you for working with Republicans on this legislation, which reflects a strong record of bipartisan work to increase transparency at the Treasury Department. H.R. 7734 would require the Treasury Secretary to promptly deliver certain Bank Secrecy Act reports to the committees of Congress that rely on those records for their oversight and legislative work. Under Secretary Yellen, the Treasury Department has taken the unprecedented position that Congress cannot have Bank Secrecy Act reports. This should concern all of us on both sides of the aisle. For the last 20 years, FinCEN has provided BSA reports to the appropriate committees of Congress without delay. This arrangement recognized Congress' authority under Article 1 of the Constitution to obtain executive branch reports, and it spared committees of Congress from having to obtain those records directly from the banks. This arrangement was effective. FinCEN facilitated a number of different congressional investigations at committees in the House and Senate, and much of what we know about money laundering and illicit finance comes from those cases. Our constitutional authority to conduct oversight has not changed. In fact, the Treasury Department's Bank Secrecy Act regulations expressly state that BSA reports can be disclosed in response to, quote, a request from an appropriate congressional committee or subcommittee. Treasury's new position isn't just undermining our investigative work, they're also challenging our ability to evaluate the effectiveness of BSA reporting in the first place. A case in point is Suspicious Activity Reports, or SARs. In 1998, FinCEN noted that it had processed 150,000 SARs over a 2-year period. 20 years later, the Bank Policy Institute found that just a sample of large banks were filing over 640,000 SARs each year, yet only 4% received feedback from law enforcement. What accounts for this massive growth? How is it connected to money laundering trends, if at all? Why are so few SARs prompting feedback from law enforcement? The administration's unwillingness to provide these documents for congressional review suggests that it may not have good answers to these questions. Congressional concerns with SARs and their usefulness prompted bipartisan provisions in the Anti-Money Laundering Act, a law that calls for streamlining SARs reporting and a review of thresholds triggering both SARs and currency transaction reports. H.R. 7734 is an additional step towards potential reform of the SARs regime. Treasury must understand that this is not a partisan matter. I look forward to continuing work with our Democratic colleagues to promote institutional accountability at Treasury and to protect Congress's Article 1 authorities. I urge my colleagues to support this legislation. And with that, Madam Chair, I yield back.
Thank you. Is there further discussion of our amendment to H.R. 7734? If not, the question now occurs on approving the amendment in the nature of a substitute. All those in favor say aye. Aye. All those opposed, no.
Aye.
In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering H.R. 7734 as amended to be reported favorably to the House. All those in favor say aye. Aye. Those opposed, no.
Aye.
In the opinion of the chair, the ayes have it. A recorded vote is not requested. The ayes have it, and H.R. 7734 is agreed to. Pursuant to notice, the chair now calls up H.R. 7733, the Cdfi Bond Guarantee Program Improvement Act. The clerk will report the bill.
H.R. 7733, a bill to amend the Community Development Banking and Financial Institutions Act of 1994 to reauthorize and improve the community development, financial Institutions Bond Guarantee.
Without objection, the first reading of H.R. 7733 is dispensed with. The gentleman from Missouri, Mr. Cleaver, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and also on the dais. The clerk will read the amendment.
An amendment in the nature of a substitute to H.R. 7733, offered by Mr. Cleaver of Missouri. Strike all after the enacting clause and insert the following.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from Missouri for 5 minutes to explain the bill and his amendment.
Thank you, Madam Chair. The community development financial institutions serve a very critical role in serving small and underserved communities that are increasingly losing access to local banks offering services. CDFIs provide the access to capital and technical assistance needed to support things like down payment assistance for first-time home buyers, technical assistance to entrepreneurs to help start and grow businesses, and increasing the supply of affordable housing in communities that banks deem too risky or unprofitable to which they will lend. In many cases, especially in rural and tribal communities where traditional banks have exited from those markets, CDFIs are often the only source of affordable, responsible finance and help people and businesses need to avoid because otherwise they attach themselves to cost predatory products. In Kansas City, Missouri, the center of the 5th Congressional District, which I represent, and across the country for that matter, CDFIs have been instrumental in reaching small and minority-owned businesses and supporting community development. There's no question about the unmet demand in all our communities that CDFIs are working to address. Prior to the launch of the CDFI Bond Guarantee Program, BGP, CDFIs were extremely limited in their ability to access capital to make large-scale investments in community facilities, basic infrastructure projects, or job-generating businesses. The BGP was enacted in 2010 to provide long-term, low-cost capital to CDFIs, which used the funding for economic development activities in low-income, urban, rural, and indigenous communities throughout the nation. Through the Bond Guarantee Program, CDFI bonds are issued by a Treasury-approved qualified issuer on behalf of one or more eligible CDFIs seeking a bond loan. Unlike the CDFI fund programs, the Bond Guarantee Program does not offer grants, but is instead a federal credit subsidy program designed to function at no cost to the taxpayers, I see right here where it says no cost to the taxpayers. The bond proceeds are debt instruments that must be repaid. As of 2021, CDFIs participating in the BGP have deployed $1.3 billion in bond proceeds, making long-term loans to high-impact community development projects, including loans for small businesses, commercial real estate, affordable housing, charter schools, healthcare facilities, rural infrastructure, and licensed senior living and long-term care facilities. All around the nation, the Bond Guarantee Program is supporting desperately needed community development. Bond Guarantee program loans have supported Kentucky Highlands, for example, Investment Corporation, headquartered in London, Kentucky, to provide financing to small businesses and commercial real estate in Kentucky using its bond loan. Citizens Potawatomi Community Development Program, headquartered in Shawnee, Oklahoma, is the first native CDFI to participate in the CDFI Bond Guarantee Program and will provide financing for large-scale commercial real estate projects in the citizens using its bond program. Impact 7, headquartered in Rice Lake, Wisconsin, received a bond loan to finance affordable rental housing, senior living facilities, small businesses, and commercial real estate projects. Community Loan Fund of New Jersey, headquartered in New Brunswick, New Jersey, to provide financing for rental housing and charter schools in low-income and underserved areas in New Jersey. All around the country, I can continue, but I'm trying to follow the clock. The CDFI Bond Guarantee Program Improvement Act will permanently authorize the program to provide certainty to borrowers and lenders. It will also reduce the minimum loan size to $25 million to allow smaller CDFIs to utilize the program and to support more community development projects. The current minimum loan size severely limits the number of CDFIs that can take advantage of the BGP program, which in turn limits the availability of capital. And with that, Madam Chair, I yield back the balance of my time.
Thank you. Is there further discussion of or amendment to the amendment in the nature of a substitute?
Madam Chair, I move strike last word.
The gentleman from Missouri, Mr. Lukemeyer, is now recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. Legislation before us is another example of my colleagues having good intent but poor execution. This legislation intends to increase investment in small CDFIs by lowering the CDFI bond minimum from $100 million to $25 million. I don't necessarily have an issue with this part of the bill, but I have not seen any specific studies or information that would definitely say this will have a drastic increase on CDFI funding or that CDFIs are starving for capital right now. For example, in 2020, Congress passed the Consolidated Appropriations Act, which not only funded the government, but included a second round of COVID relief. Included in this relief was the Emergency Capital Investment Program, the ECIP. This program specifically provided $9 billion in capital directly to CDFIs and MDIs, to provide loans and forbearance for small businesses and consumers. When the Consumer Protection Financial Institutions Subcommittee had a hearing on CDFIs and MDIs in February of this year, this money had not yet even been spent. It would appear prudent to determine how MDIs and CDFIs have handled this influx of capital before we permanently authorize this program. A permanent authorization would take congressional oversight of this program out of the hands of this committee. I'd be happy to work with my colleague on this issue, but I think permanently authorizing a program to provide additional capital to CDFIs and MDIs when they already have more capital than they know what to do with is irresponsible legislating. With that, Madam Chair, I urge my colleagues to oppose this legislation, and I yield back.
Thank you. Is there further discussion of or amendment to the amendment in the nature of a substitute?
Madam Chair, I have an amendment at the desk.
Without objection.
I had something on that.
Gentleman is recognized for amendment for 5 minutes.
Oh, here it is.
Where? We will pause to allow copies of the amendment to be distributed electronically. Are we ready? Thank you very much. I think that there's been an agreement on Mr. Timmons' amendment, and it is being put in writing at this time. Meanwhile, I will recognize myself for 5 minutes, and then we'll come back. I support the Cdfi Bond Guarantee Program Improvement Act, led by Representative Cleaver, the chair of the Subcommittee on Housing, Community Development, and Insurance. The Cdfi funds Bond Guarantee Program provides CDFIs with federally guaranteed, long-term, low-cost capital to support existing and new economic development projects in their communities. The program is designed as a zero-subsidy credit program and does not require annual appropriations funding, and the bond proceeds must be repaid. Unfortunately, small and medium-sized CDFIs currently have difficulty applying for this financing directly because the current $100 million minimum loan amount is much higher than the amount those CDFIs are seeking, which is in the $10 million to $25 million range. As a result, some smaller CDFIs can only access the program by applying with larger CDFIs. This bill would lower the minimum threshold for a bond issuance from $100 million to $25 million, giving smaller CDFIs a fair shot at being supported by the program. As we know, CDFIs serve as lifelines to communities across the country. For example, when the Paycheck Protection Program, or the PPP program, was launched, we saw megabanks serve their concierge clients. I worked with Small Business Committee Chair, Representative Velasquez, to establish a $60 million set-aside in the second round of PPP loans to allow CDFIs, MDIs, and other community financial institutions to help deliver to small and minority-owned businesses struggling in the pandemic. I also worked hard with members of this committee, including Ranking Member McHenry, as well as Senators Warner, Brown, and Crapo, to secure $12 billion in capital investments and grants to support CDFIs and MDIs. Since becoming chairwoman, we have held a series of hearings about the critical role these critical community financial institutions play in supporting underserved communities. The reforms in H.R. 7733 were also included in my updated comprehensive bill, the Promoting and Advancing Communities of Color through Inclusive Lending Act. That we considered at our February hearing on MDIs and CDFIs. Passing this bill would build on this committee's extensive work to support these community institutions' capacity to serve so many communities that have been left behind. Having access to bond financing will support those CDFIs to implement larger projects, including loans and investments to small businesses, affordable rental housing, charter schools, health care facilities, and to sustain home ownership. While the bond guarantee program's authorization ended in 2014, Congress has extended it on a year-by-year basis in annual appropriations bills. This bill will make the program permanent. Furthermore, this bill is a House companion to a bipartisan bill in the Senate, S. 3441, introduced by Senators Tina Smith and Mike Rounds. This bill is supported by the CDFI Coalition, Community Reinvestment Fund, USA, Credit Union National Association, Independent Community Bankers of America, Lindustry, Local Initiatives Support Corporation, National Association of Federally Insured Credit Unions, National Association of Latino Community Asset Builders, National Community Reinvestment Coalition, and Opportunity Finance Network. So, I would urge my colleagues to support this bill to ensure that more CDFIs have access to long-term financing through the Bond Guarantee Program so they continue to spur economic development in communities across the nation. And of course, I will yield back my time, and I will now call on Mr. Timmons, who has perfected his amendment, and he will now offer that amendment for consideration.
Thank you, Madam Chair. I have a revised amendment at the desk.
We will pause to allow copies of the amendment to be distributed electronically. We have it. Have all members received the amendment? If so, I'd like to reserve a point of order on the amendment. The clerk will report the amendment.
Madam Chair, I ask unanimous consent to dispense with the reading.
Gentleman is recognized for 5 minutes.
Unanimous consent to dispense with the reading of the amendment.
You see to dispense with the reading.
You're going to dispense with the reading of the amendment?
Yes, ma'am.
If so, without objection, the amendment will be considered as read. The gentleman who is recognized for 5 minutes is not going to move to explain the amendment.
I'd be happy to explain the amendment. Yes, ma'am. I just wanted to dispense with the reading.
You will, we will dispense with the reading of the amendment. Thank you.
Thank you, Madam Chair. May I speak to the
Is-
amendment?
The gentleman is recognized.
Thank you, Madam Chair. I just want to begin by thanking my friend, Mr. Cleaver, for working with me on this amendment. I think it's a good program, and I had some concerns about oversight and about not having any sunset provision on it, and I think we've worked through those. And I just want to say that I really appreciate you working with me and talking through it, and I look forward to working with you again in 4 years after we have additional information to continue this program after that, and I just really appreciate it. This amendment does two things. It sunsets the program after 4 years, giving us the opportunity to reconsider it, and it requires a second report after the 3rd year. So I think this is a good amendment, and I appreciate Mr. Cleaver working with me on this, and I encourage all my colleagues to support it. With that, Madam Chair, I yield back.
Thank you. Is there further debate on the amendment? I now recognize myself for 5 minutes. I want to thank Mr. Cleaver and Mr. Timmons for working together to reach a bipartisan compromise on this bill. Such work follows on several years now of this committee reaching agreement to support community development, financial institutions, and the underserved communities they support. I hope all members will support this amendment and the underlying bill, and I yield back the balance of my time. Is there further discussion of or on the amendment to H.R. 7733? If not, the question now occurs on approving the amendment in the nature of a substitute as amended. All those in favor say aye.
Aye.
Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute as amended is agreed to. The question now occurs on ordering H.R. 7733 as amended to be reported favorably to the House. All those in favor say aye.
Aye.
Those opposed, no. Aye. In the opinion of the chair, the ayes have it. The ayes have it, and H.R. 7733 is agreed to.
Is Lynch here? Where's Mr. Lynch?
He's not ready?
I mean,
Pursuant to notice, the chair now calls up H.R. 7732, the Strengthening the Office of Investor Advocate. The clerk will report the bill.
H.R. 7732, a bill to amend the Securities Exchange Act of 1934 with respect to the Office of the Investor Advocate and for other purposes. Be it enacted by the Senate.
Without objection, the first reading of H.R. 7732 is dispensed with. The gentleman from Massachusetts, Mr. Lynch, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and also on the dais. The clerk will read the amendment.
An amendment in the nature of a substitute to H.R. 7732, offered by Mr. Lynch of Massachusetts. Strike all after.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from Massachusetts for 5 minutes to explain the bill and his amendment.
Thank you, Madam Chair. The SEC's Office of the Investor Advocate was created as part of the Dodd-Frank Act. The Office of the Investor Advocate's mission is just that, to advocate on behalf of the investor and ensure that the interests of retail investors are adequately represented. This office analyzes the potential impact that proposed regulatory changes will have on its investors, identifies problems that investors have with investment products, and recommends changes to statutes and regulations. In addition to providing a voice for investors, the Investor Advocate assists retail investors in resolving problems that they have with the Commission or a self-regulating organization. The Investor Advocate is also responsible for investor research and studies investor behavior to gain insight and provide data regarding policy choices. Lastly, the Investor Advocate supports the SEC's Investor Advisory Committee. So in brief, this bill would strengthen the independence and increase the reliability of the funding for the FCC's Office of the Investor Advocate. And this bill would authorize the office to conduct investor testing and other research and publicize the findings. This bill broadens the description of the experience required to be appointed to Investor Advocate, removes a requirement that the Investor Advocates consult with the chairman on staffing, and requires the Commission to consult with the Investor Advocate when considering rules and regulation. It also authorizes the Investor Advocate to engage in investor research and investor testing programs, and it safeguards the independence of that research by authorizing the Investor Advocate to publicize the results without prior review. Additionally, this bill adds provisions that align with the Inspector General Act of 1978, including protecting the Investor Advocate from removal for advocating policies adverse to those of the chairman or any commissioner. This bill has received strong support from state security regulators, consumer and investor advocates, and retail institutional investors, and I urge my colleagues to support this bill, and I yield back.
Thank you. Is there further discussion of our amendment to the amendment in the nature of a substitute? The gentleman from Michigan, Mr. Huizinga, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair, and I appreciate my colleagues' efforts on this bill. I just do have a couple of questions for him and for the gentleman from Massachusetts. So if the gentleman would be willing to engage with me, I'd like to ask a few questions. So, reading a book about the start of Dodd-Frank. I wasn't here. I was elected in 2010. I've been dealing with the echo effects of Dodd-Frank, and Dodd-Frank was groundbreaking in many ways. And one of those things was it was very clear in this particular instance, laying out that the Office of the Investor Advocate's functions and responsibilities, as well as its independence. You argue that your bill is needed to increase the office's independence and to protect the investor advocate from termination by a vengeful SEC chairman. But Mr. Lynch, is it the same individual who has held the title of investor advocate since the SEC first stood up the office in 2014, serving under both chairmen appointed by Republicans as well as Democrats? Is that accurate?
You know, I'm not quite sure. I was here in Dodd-Frank, but I'm blanking on who was actually in place at that.
Well, let me affirm it is.
Okay.
It is the exact same person. In fact, after criticizing SEC rulemakings under Chairman Clayton, the previous chairman under President Trump, in the Investor Advocate's annual reports, Chairman Clayton did not terminate this investor advocate. It does seem like this bill is in search, or is a solution in search of a problem, and so I'm really curious about what I'm missing. And does this really warrant its own standing line item within funding and within the budget? So what am I missing?
I don't think you're missing much. First of all, if you're going to have an advocate for investors, I think the way we structure other cases where we have inspectors generals overlooking certain subject matter areas, this would do the same for this advocate, investor advocate. And the problem that has arisen, and it is with this current investor advocate, is that in the past when this investor advocate has been tasked with representing the interests of investors, that interest has come in conflict with the the policy of the chair.
But okay, reclaiming my time on that. But do you agree that being an advocate for investors should also include advocating for greater investment opportunities for retail investors in a safe manner? And if you're going to add to this list of investors and this list of responsibilities, as your bill does, why not add a requirement for the investor advocate to examine how the SEC can safely expand investment opportunities and access for retail investors? I'm not seeing where them being in conflict with the SEC chair has had ramifications for the investor. Yet I don't see us addressing and advocating for actual expansion of investment opportunities. And very briefly, I'll let you answer that.
Well, sure. So we want someone who's strictly looking out for, that's what an investor advocate is, right?
Yeah.
We want that singular representation, not necessarily the whim of Congress, who was ever in control at that time.
I'm going to reclaim my last remaining minute on this. I don't feel like that has been a satisfactory expansion or explanation of why we are going to expand this. This should be about impact on investors. Proposed from the commission. That was done by this particular person with Jay Clayton at the helm, and this I think further insulates investor advocate by specifying that they may not be removed for advocating policies, which is not done anywhere else. In fact, I would ask the question, should we extend these same protections to other independent entities, such as maybe board members of the PCAOB? So I'll let that hang out there. I will be hoping to work with you, but I don't see the necessity of this, and I yield back.
Gentleman yields back. Is there further discussion or amendment to the amendment in the nature of a substitute? The gentlewoman from Missouri, Ms. Wagner, is now recognized for 5 minutes to strike the last word.
Madam Chairwoman, I move to strike the last word. I too would like to reiterate my thanks to Mr. Lynch for his efforts on this bill. And Mr. Lynch, before you get someone to yield you some time, I have had a few questions too, so maybe you can combine all of them. A couple follow-ups here. Why does your bill require the investor advocate to conduct investor testing and investor research, but grants the investor advocate, quote, discretion to make its findings public? My concern, just to get to the point, is I think it allows the investor advocate to perhaps cherry pick what findings get released according to whatever helps advance the agenda, its agenda. So I'm wondering about this just discretionary piece of the legislation, sir. Then my next question would be that since the SEC built out the Office of the Investor Advocate in 2014, according to Dodd-Frank's guidelines, there has been only one, unbelievably, one investor advocate. And this individual has held this position for over 8 years. The question would be, why should we not be considering term limits, perhaps 2, for the investor advocate? And then, as a follow-on, I guess I'm just wondering what value has the Office of Investor Advocate added at the Commission? And why shouldn't we just dissolve, frankly, the Office of Investor Advocate altogether? I think the bill loosens the selection criteria for the investor advocate and narrows the guidelines for termination by the chairman. And on top of that, the bill creates the investor advocate's own line item in the budget, kind of treating the investor advocate as somehow outside the commission. And this is of concern to me. So I just, I'm wondering why we wouldn't want to make the investor advocate, why we'd want to make them less accountable to Congress and the commission. So those are just some of my questions, Mr. Lynch, and I'll leave them to you to have someone yield time. I'll yield back at this time.
Will the gentle lady
Yes,
yield?
I'll yield. I'm going to yield to the gentleman from Michigan, so we get the questions in so that Mr. Lynch can properly respond.
Yeah, and real quickly, I guess I would echo what my friend from St. Louis was saying. This is seemingly again a solution in search of a problem, and I would like to submit for the record. We have a letter from the investor advocate advocating for passage of this bill. Now, you might ask, why am I submitting a bill or a letter in support of the gentleman's bill if I oppose it? I think this just once again shows that they may be advocating for themselves and the bureaucracy rather than for the investor and for the actual people that are utilizing and depending on the Securities and Exchange Commission. We have a structure with the SEC, and I'm aware of no other inspector. This isn't an inspector, it's an advocate. I'm not aware of any other advocate that would have an independent financed line in the budget if we are looking for them to operate within the structure. And we have people that are heading up various agencies that move in and out depending on who happens to be president. And we also have folks who head up agencies that are pan across any particular president and who will have additional years. but they have the responsibility internally to deal with those issues. So I'd like to submit this for the record.
Without objection, such is the order.
And I yield back to the lady.
Thank you very much. And so in recapping my questions, Representative Lynch, and again, I appreciate the spirit of what you're trying to do. I'm just trying to figure out what this investor advocate does after 8 years, the same person. Maybe we should be considering term limits here. I'm not sure that they've issued anything, so I'm not sure what value they're adding. I'm very concerned about imposing testing and in further research, but they get to decide what public findings they would like to put out, and that just sounds a lot like cherry picking to me, and the line item is of great concern. So that on top of Representative Huizinga's questions would be ours, and I will yield back and let the gentleman respond. Thank you.
The gentlewoman from Texas, Ms. Garcia, is recognized for 5 minutes to strike the last word.
Madam Chair, I move to strike the last word, and I want to rise and just speak for this bill. I think it's really good at strengthening the Office of Investor Advocate, and as some of my notes suggest, they have reviewed and made policy recommendations. In fact, some of these are their policy recommendations. But I think the intent of this bill is to beef it up and make sure that they can do their job. And with that, let me just say again that I support this bill, and I yield the remainder of my time to the author of the bill, Mr. Lynch, so that he can more adequately respond to the questions that have been raised with concern from some of my colleagues.
I thank the gentlelady. Look, as currently constituted, the Office of the Investor Advocate is both accountable and transparent. So the chair can actually fire the inspector advocate, okay? And let me just back up a little bit. This is 2 people, full-time employees, 2 people. So this is not some huge bureaucracy. And what they've done in the past, other SEC chairs have basically eliminated funding to the point where the investor advocate was unable to perform the mission that we have set it up for. So yes, it was set up under Dodd-Frank. Yes, we created the position of investor advocate. But since then, 2 people. For 7 years, 2 consecutive SEC chairs, limited to 2 people. So now we've plussed up a little bit. I think we have a total of 6 people there now, 6 people. And what this bill would do by ring fencing the funding for the current iteration of the Investor Advocate Office would be to ring fence the funding so those people, minimum 6 people. Think about the size of the markets that they're required to police in a way and protect the interests of investors, a total of 6 people. So they would indeed have to pick and choose what issues they would want to spend their time on to the greatest benefit to investors. I know there are a bunch of other questions you had. Let me just try to go down them. Let me just give an example. We look back at when Dodd-Frank, I was here, Dodd-Frank was being considered. We did not have, the influx of stable coins and crypto and all of that. Yet we see today that many investors are investing in crypto and stable coins with little more than a very technical white paper that's being put out there. Nothing more than that. And we have seen just in the past week or so with the collapse of Terra and the huge losses sustained by investors in that case, where it's a new day in terms of what must be done within the Office of Investor Advocate to protect people from those type of dangers and vulnerabilities in the market that they are not aware of. So this office has never been more needed than it is right now. And that's what this bill would try to do, to allow the investor advocate to have the same budget process that as the SEC Inspector General, basically. This maintains the same accountability as already exists with the Inspector General. The advocate, again, the advocate is appointed and removed by the SEC chair. Nothing in HR 7723 would change that. The advocate is required to make annual reports to and be accountable to Congress. The advocate does not have the ability to propose rules or regulations in any other way. The investors would benefit from this, as do market participants when the Commission and self-regulatory organizations propose and implement policies that are evidence-based and pursue sound and effective policy goals. So by running tests on some of these requirements would let us know whether that rulemaking was to the benefit of the investor. And it allows that communication from the investor advocate's office directly to the public without having that filtered by the SEC chair, who might have a different opinion or might have a pride of authorship conflict in pushing that original regulation. That has happened in the past when regulations were supported by the SEC chair and were found to be harmful to the interest of investors. I yield back.
The gentleman from Georgia, Mr. Laudermilk, is now recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I'd like to yield my time to the gentleman from Michigan, Mr. Huizinga.
Thank you, and I appreciate my colleague doing that. And I'm not going to take the full 5 minutes, and I'll be yielding back, but the investor advocate is not the enforcement arm of the SEC. And I wrote this phrase down. You said that they are policing the system. These people are not policing the system. They're not the regulators. They are not the enforcers. And in fact, advocates, at least when I was in the state legislature in the 12 years that I've been here, anytime we've talked about an advocate, it has been someone who will go and advocate on behalf of a citizen who is having an issue, oftentimes with that own agency. Now, this is a little more expansive. We're talking about the rules of the agency. Okay, let's still talk about that, but that doesn't supplant the authority of the SEC. Now, granted, apparently the gentleman is very concerned about the chair of the Securities and Exchange Commission. I know I am. And maybe that lack of trust in the chair of the SEC is warranted currently, but I don't think that's what his point is. But we are in fact pulling back and really not allowing our regulators to act as regulators. I think this regulator at the current chair at the SEC has been expansive. He's been aggressive like none other. The number of rules that have been proposed, the timeframes with which to respond to those rules, all of those things. If we could have the advocate actually maybe go and advocate for a little more time for investors to comment on some of these rules. How about that? I don't see the investor advocate doing that. But at the end of the day, there is a phrase that floats around Washington, D.C. Elections have consequences, right? And I might not like who was appointed to the head of the Securities and Exchange Commission based on who won the presidency. But it is their administration, and it is their ability to run it. So now, that's also then our responsibility to hold them accountable when it comes time. And we need the tools to be able to hold them accountable. And I would say that Congress has been on a regular practice handing over its tools to hold the administration, all administrations responsible for those decisions. So again, the individual SEC structure is there with a purpose to be the enforcement arm. They can work with this office within the SEC, but to grant it its own line item, its own autonomy. It's basically a CFPB within the Securities and Exchange Commission. And that doesn't make a whole lot of sense if it's going to have its own separate line item. So with that, I'll yield back to the gentleman from Georgia and say thank you.
Thank you very much. The committee will stand in recess and will resume immediately after this vote series on the floor. I would urge all members to return promptly so that we can move forward with the agenda that we have for the day. The committee will come to order. For what purpose does the gentleman from Michigan seek recognition?
Madam Chair, I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed electronically. Have all members received the amendment? If so, I would like to reserve a point of order on this amendment. The clerk will report the amendment.
Amendment to the amendment in the nature of a substitute
Madam Clerk,
to
Madam Chair, I request unanimous consent that the amendment be considered as read.
The amendment will be considered as read. The gentleman is recognized for 5 minutes to explain the amendment.
Thank you, Madam Chair. This amendment resolves what I view as a shortcoming in the statute listing the duties and responsibilities of the investor advocate, sort of as we had been discussing before we were interrupted by the votes on the floor. In my view, an advocate should help resolve issues or grievances and identify problems within an organization. And That could be with the IRS, it could be a child advocate, it could be a number of examples. And in the context of the SEC's investor advocate, analyzing the potential impact of proposed rulemaking on investor tracks with the general notion of what an advocate should do. Even though these are commonly accepted principles of what an advocate should do, those are all explicit responsibilities of the SEC's investor advocate as spelled out by Dodd-Frank Section 925. Something that is missing in that list of duties, however, there's nothing requiring the SEC investor advocate to advocate for greater access for retail investors. My amendment fixes this oversight by requiring the investor advocate to identify and analyze ways in which non-accredited investors who have limited or sometimes no investment access throughout our capital markets and the opportunity costs associated with limited or no access. It also requires the investor advocate to make policy recommendations for increasing investment access for non-accredited investors. So it seems to me that if this investor advocate can make policy recommendations on a rule proposal from the chair, certainly they could then make policy recommendations for for the investors themselves, whether they be accredited or non-accredited. Now, some on the other side might say, well, this doesn't need to be explicitly listed. It's already implicitly covered by the existing statute. Well, if that's the case, then why is it necessary to add language requiring the investor advocate to conduct investor testing as the underlying bill does? How is that not already implicitly covered in the statute under the requirement to analyze the impact of proposed regulations? Now, this is something that we have a lot of debate on in the committee. And it's not debate about the facts, the numbers are the numbers, but how we resolve this. Because I think many of us all agree that this is less than ideal. When we have 15%, less than 15% of U.S. households who actually qualify as accredited investors. This is a very small pool of people then that can invest in new technologies or new products. And only about, 1.3% and 2.8%, so that is just over 4% total of those accredited investors are actually Black or Latino, respectively. These investors are regulated to the sidelines and oftentimes cut off from the most high-growth investments simply because they don't meet the arbitrary income or wealth thresholds that are somehow supposed to be the representative of one's, quote, financial sophistication. Trust me, I know plenty of rich people who I wouldn't put in charge of my checkbook, and I know some other folks who are hardworking, middle class, or even lower middle class who I would, because they do have that financial sophistication. So I just don't buy that. You can't tell me that there's not a way to rethink financial sophistication in such a way that works for more than just a tiny group of our population and does so safely for those investors. This discriminatory rule is unfairly holding investors back from more choices and opportunities to grow their savings and invest in the entrepreneurs in their own communities. So the SEC's investor advocate should also be a voice for greater opportunities for the investors who have been excluded for far too long. Bottom line, a vote for my amendment is a vote for making the SEC's investor advocate to be a true advocate for empowering retail investors. And Madam Chair, I'll just read the relevant language from my one-page amendment here, which is to Section F. Identify and analyze ways in which non-accredited investors have limited or no investment access throughout our capital markets and the opportunity costs associated with such lack of access. And with that, I yield back.
The gentleman from Massachusetts, Mr. Lynch, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I move to strike the last word. This amendment basically takes the previous amendment, strikes all of the language with respect to the investor advocate, and instead redirects the focus of the investor advocate to enable or assist non-accredited investors, people that, as the gentleman describes, don't have the wherewithal and ability that accredited investors have to make certain investments. I do want to point out that 58% of the American households do invest in stocks. They do own stocks. And there's plenty of opportunity on the registered investment side. What the gentleman is suggesting is that we ought to use the investor advocate to get retail investors, mom and pops, into riskier investments. That's what his amendment would do. It would turn the mission of the investor advocate, one from protecting investors to pushing them into riskier investments. And you would think that after what has happened in the last 2 weeks with the Terra stablecoin and other massive losses by uninformed or misinformed investors, that we might collectively see the need for someone to be watching out for retail investors. So I won't spend a lot of time on this. This is just a bad idea, a very bad idea. We have a whole framework within the SEC to actually to deal with the inequity in information that is available to retail investors versus those who are accredited investors and to the proponents of some of these alternative investments. And the SEC protections are meant to do just that, to put guidelines and protections on the side of retail investors and other investors, to deal with the disproportionate balance, I guess, of information to all parties in the market. And the gentleman's amendment would push us in the opposite direction, one that, at least in this day and age, we should be cautioned against. So I asked my colleagues to reject the further amendment by the gentleman from Michigan and vote for the underlying bill. Thank you.
Thank you.
Madam Chair,
The gentleman from Kentucky, Mr. Barr,
move to strike.
recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I yield my time to the gentleman from Michigan.
I appreciate that, and this will be very brief. There's been already 2 allusions to crypto that have been brought up. You don't need to be an accredited investor right now to be feeling the pain of having a cryptocurrency dropping in half right now. That's not what this is about with an accredited investor. Oftentimes, those smaller startup entrepreneurial companies, which are in every single one of our districts, doesn't matter. Michigan, California, Massachusetts, down south, up north, east, west, rich, poor, it doesn't really matter. There are opportunities to invest. And the question is are we going to continue to box a significant portion of our citizenry out of any opportunity to invest their dollars? And again, it would be with structure that would keep them safe and all those other things. We have literally put arbitrary income and net worth values on whether someone is, quote, financially sophisticated or not. It doesn't have anything to do with financial sophistication. It has everything to do with how big their checkbook is. And guess what? There's a lot of people that have a fat checkbook who didn't necessarily get there by being financially sophisticated. They might have been lucky. They might have been born into the right family. And we also do have people who have made it on their own. But to have those separations like that just seems very, very arbitrary to me. So I'll yield back to the gentleman from Kentucky.
Thank you. I yield back.
The gentleman yields back. I now recognize myself for 5 minutes. I oppose this amendment offered by Mr. Huizinga. Mr. Huizinga, amendment strikes practically all of the improvements to to the Office of the Investor Advocate put forth by Mr. Lynch. It's unfortunate that Mr. Huizinga was not here during the financial crisis to understand just how important this office is, or the broad failings of the SEC in the lead-up to the criticism. Prior to the crisis, the SEC had suffered years of underfunding and deregulation and was therefore ill-equipped, understaffed, lacked the political will to go after fraudsters like Madoff and the kind of high-risk trading activities on Wall Street that eventually crashed the economy. This weakening of our cop on the Wall Street beat resulted in trillions of dollars in losses to individuals and families and wiped out millions of retirement nest eggs. Congress passed the Dodd-Frank Act, which included many SEC reforms and new programs. In fact, when this committee considered those reforms, they passed with strong bipartisan support. In the Dodd-Frank Act, Congress created the Office of Investor Advocate to, quote, strengthen the SEC and ensure that the interests of retail investors are better represented, quote, unquote. By law, the investor advocate's mandate is to offer forward-looking reforms and review SEC's and the self-regulatory organizations' policies through the perspective of investors. Mr. Lynch's bill, H.R. 7732, would further strengthen key functions of the investor advocate, a priority for Democrats who have long sought to put investors and consumers first. Mr. Lynch's bill, which the amendment seeks to strike, would ensure that the investor advocate is resourced to engage in investor testing and research, and would strengthen the voice and independence of the investor advocate so they can speak up in contentious debates without the fear of being silenced or fired or having their budget cut. This bill is widely supported by those stakeholders who have long advocated for the best interests of mom and pop investors, including North American Securities Administrators Association, Consumer Federation of America, Americans for Financial Reform, and others. So I urge my colleagues to oppose the Huizinga Amendment and pass Mr. Lynch's bill. And I yield back the balance of my time. Is there further debate on the amendment? If not, I withdraw my point of order. The question now occurs on the amendment. All those in favor of the amendment say aye.
Aye.
Those opposed, no.
No.
In the opinion of the chair, the noes have it. The noes have it, and the amendment is not agreed to.
Madam Chair, I request a recorded vote on that.
A recorded vote has been requested. Pursuant to the chair's previous order, the vote on this question is postponed. Is there further discussion of or amendment to the amendment in the nature of a substitute? If there are no further amendments, without objection, the previous question is ordered on H.R. 7732. And pursuant to Section C5 of Committee Rule 3, further proceedings on the pending amendments are postponed. Pursuant to notice, the chair now calls up H.R. 7022, the Strengthening Cybersecurity for the Financial Sector Act of 2022. The clerk will report the bill.
H.R. 7022, a bill to amend the Federal Credit Union Act to modify requirements relating to the regulation and examination of credit union
Without objection, the first reading of H.R. 7022 is dispensed with. The gentleman from Illinois, Mr. Foster, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and are also on the dais. The clerk will read the amendment.
Amendment in the nature of the substitute to H.R. 7022, offered by Mr. Foster of Illinois. Strike all after the enacting clause and insert the following. Section 1.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentleman from Illinois for 5 minutes to explain the bill and his amendment.
I want to first thank Chairwoman Waters for her leadership in bringing up this bill and for continuing to prioritize this important and timely topic. One of the most important functions of most federal banking regulators is to examine the third-party technology service providers employed by the financial institutions under their purview. This oversight process is essential to ensure that players in our financial services ecosystem are using only technology that abides by secure, robust, and resilient cybersecurity standards to help protect our financial institutions from cyber attacks. At a time when we all have great concern about potential cyber retaliation from Russia on the United States, having robust cybersecurity protocols for America's financial sector are paramount. And we've learned the hard way through the SolarWinds and other attacks about Russia's predilection for supply chain attacks, of which third-party software vendors are an alluring target. Unfortunately, Congress has allowed this important oversight authority to lapse for both the NCUA and FHFA, leaving credit unions and the federal home loan banks at significant risk of supply chain cyber attack. In every consecutive year, under both Republican and Democratic administrations, beginning in 2015, FSOC has explicitly recommended that Congress reinstate this authority as part of their congressionally mandated annual report. The Strengthening Cybersecurity for the Financial Sector Act of 2022 would correct this regulatory gap and improve the safety and soundness of our banking system. With this ANS, I'm proud to say that the bill has broad support, including, among others, the Americans for Financial Reform and Public Citizen. We should act now to ensure the resiliency of our financial sector and protect it from cyber attack. I'm proud to support this bill and urge all of my colleagues to do the same and yield back the balance of my time.
Thank you. Is there further discussion of or amendment
Madam
to
Chair.
the amendment in the nature of a substitute?
Madam Chair.
The gentleman from Kentucky, Mr. Barnes, recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. HR 7022, titled The Strengthening Cybersecurity for the Financial Sector Act, may very well be a good faith attempt by my friend and colleague from Illinois to shore up the IT infrastructure of our financial system. However, as it is currently drafted, I question whether the goal of this bill is to drastically expand the size and scope of federal regulation under the guise of cybersecurity, or whether it's really targeted to advance the cause of cybersecurity. Other than the title, the word cyber never appears again throughout the legislation. As currently drafted, this legislation would make, for example, the FHFA the prudential regulator of literally every business partner of the GSEs and the federal home loan banks. I don't know if the author of the bill intended that, but that's the way the bill is currently written. Not only would this bill expand the regulatory authority of the FHFA to a wide swath of our financial ecosystem, it would also make them the regulator of each and every one of the GSEs and federal home loan banks' third-party contractors, which includes everything from lenders to rating agencies to credit bureaus to even janitorial staff and many more industries. The FHFA was established with a specific focus to regulate the GSEs and the 11 federal home loan banks, not to be the regulator of wide swaths of the entire economy. This bill raises several questions like, why was this legislation written to make them so? Does FHFA have the capabilities to conduct this oversight? What would the effect of this change be? And while we may need legislation like this, and we certainly have challenges in cyber security, the legwork has simply not been done. And while it addresses and provides additional authority to the FHFA as a new regulator of literally every business partner of every GSE and every home loan bank, there was not one single hearing on this bill or this topic in the Housing and Insurance Subcommittee. There was only one cybersecurity hearing in the subcommittee in which I serve, which is the Financial Institution Subcommittee. But this bill is attempting to confer a whole lot of additional authority to the FHFA, which we've never really discussed in a hearing. We really don't have any of the answers to these questions because the only time this bill has ever come up was when it was attached to this November Financial Institution Subcommittee hearing. What's telling about this is that Fannie Mae, Freddie Mac, and the Federal Home Loan Banks don't fall under that subcommittee's jurisdiction. They fall under the Housing Subcommittee's jurisdiction. So we've never even had a conversation about whether this idea is a good one. Why is that? Well, for one thing, it's because it's been nearly 1 year now since the Biden administration's partisan purge of the FHFA, and yet the chair has not had a single conversation about housing finance reform and does not appear interested in conducting any oversight whatsoever of the FHFA, and it's not so new anymore director or acting director Sandra Thompson. So maybe expanding the FHFA's power from regulating 13 U.S. government charter institutions to literally an unlimited number of their business partners across the globe might require a little bit more thought and deliberation. Similarly, it is unclear whether the NCUA has the capability to even regulate third-party service providers for credit unions. Does the NCUA have the expertise or the resources to handle this? And in terms of broad-based support, Dr. Foster talks about broad-based support. That's simply not true. The Mortgage Bankers Association is opposed to the bill in its current draft form, as is the Housing Policy Council, and it's probably for the same reasons that we mentioned. We may very well need a bill like this. We may very well need to strengthen the cybersecurity capabilities of credit unions and those entities that FHFA regulates. But there needs to be a considerable amount of additional thought to the drafting of the bill. And for all these reasons and more, this legislation is not ready for prime time, and I urge my colleagues to vote no on this legislation, and let's do this in a little bit more thoughtful manner. With that, I yield back.
Thank you. The gentleman from Colorado, Mr. Perlmutter, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I will yield to my friend from Illinois for as much time as he might consume.
Thank you. I'd just like to respond to a couple of points on there. This bill was noticed in the FSOC hearing on May 12th and actually discussed to a significant extent in the task force hearing on May 13th, the next day, where I see my friend from Ohio, Mr. Gonzalez, was here. As I recall, he asked the witness from the NCUA, Kelly Lay, basically what can be done to eliminate barriers for credit unions to adopt better technology, and her answer was essentially to pass this bill to allow oversight of third parties. And so I think there has been significant discussion about this for years and years as Congress has ignored the repeated entreaties of various entities to fix this regulatory hole. And so that's it. I guess maybe I will actually mention, I'll just quote from her written testimony from Kelly Lay of NCUA in our May 13 hearing. Quote, "We appreciate the continued support for this committee, and thank Chairman Foster for introducing the Strengthening Cybersecurity for the Financial Sector Act, this bill, which restores NCUA's third-party vendor examination authority. The enactment of this legislation would close this growing regulatory blind spot for the NCUA that it continues to confront." So, this has been discussed. Also, I believe that the impression that this would somehow confer prudential oversight to vast numbers of new organizations, I think it is not a correct reading of this piece of legislation. The phrase, quote, "subject to regulation and examination" in H.R. 7022 does not confer comprehensive prudential regulatory authority to FHFA. The authority is limited to the services performed, largely cyber. And so I think the fear that somehow there's going to be a vast new regulatory enterprise triggered by this, I think is not a correct reading of the legislation here.
And I'll reclaim my time. I'd remind my friend from Kentucky, he did mention that we took up this bill, this subject, in consumer protection and financial institutions, and the bottom line of the discussion from the witnesses is that you're only as strong as your weakest link. And the concern was that the vendors were going to pose that weakest link. And that was the purpose of trying to beef this up so that we don't have coming in through a third-party vendor some malicious software, some malware of some kind that then infects the entire financial system. So I appreciate my friend's concerns, but I think they were certainly addressed in the hearing that we had, and I remember my friend, Mr. Barr, asking questions on this very subject. So with that, I yield back to the chair.
Thank you. The gentleman from Michigan, Mr. Huizinga, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair, and I'd like to yield to the gentleman from Kentucky.
Well, I did ask questions, and as I said before in my statement, we may very well need to beef up our cybersecurity authorities. The point I was making is that we had a hearing in our subcommittee regarding financial institutions. This bill deals with not just the NCUA, but also FHFA. And that's where we really have not explored the capabilities of FHFA that I'm aware of. And maybe I could yield to my friend from Arkansas who serves as the ranking member of the Housing Subcommittee to explore whether or not his subcommittee has fully explored whether or not FHFA can take on all of these additional responsibilities and whether this legislation is written in a way that would actually get at just the topic that Dr. Foster's focused on, which is cybersecurity, and not confer this generalized regulatory authority to regulate all of these third-party entities. And so,
The gentleman will yield. I'll reclaim my time and yield to the gentleman from Arkansas.
Well, thank the ranking member of Capital Markets and thank my friend from Kentucky. Yeah, I thought that the idea of conforming the NCUA on cyber made sense to me as a former community banker for many, many years. I've gone through my share of IT exams and cybersecurity exams as a bank CEO. So that made sense to me. But extending suddenly to FHFA, this kind of a complete aspect of the ecosystem of Fannie Mae and Freddie Mac, all their vendors that don't even have anything to do with technology, and give them that kind of regulatory authority, I thought was really stepping way beyond what the FHFA's mission is for the GSEs and for the Federal Home Loan Bank System. I think it's not something that we should do, and I don't think we've thoroughly explored that. In fact, the Federal Housing Finance Agency has its own challenges in doing the work that it's doing, which is making sure that the two orphans, Fannie Mae and Freddie Mac, have the proper oversight of their very complex, very risky mission. And this would be a distraction, I think, from their principal role, which is safety and soundness. So I thank my friend for the time, and I yield back to the gentleman from Michigan.
And I will yield back.
I myself for 5 minutes. I support H.R. 7022, the Strengthening Cybersecurity for the Financial Sector Act, sponsored by Representative Foster, who is the chair of the committee's task force on artificial intelligence. This bill will give the National Credit Union Administration and Federal Housing Finance Agency the authority to examine and regulate third-party service providers of credit unions and government-sponsored enterprises, including for cybersecurity, anti-money laundering, and other compliance purposes. The bill provides these agencies with similar authority that federal banking regulators already have to conduct oversight of banks, vendors. Let me repeat that. The Fed, FDIC, and OCC, our bank regulators, already have and use this authority to safeguard the banking system, but the credit union regulator and GSE regulator do not have this authority. In 2000, Congress temporarily gave NCUA this authority during the Y2K scare. So this bill would restore that tool and make it permanent. In the current financial marketplace, where the use of various technologies are evolving quickly, banks, credit unions, mortgage companies, and other financial companies have become more dependent on a wide range of third-party service providers for their business operations, including to facilitate payments and provide core data processing, information technology services, account verification, and cybersecurity compliance. These third-party vendors may also be contracted by financial institutions to help defend against cyber attacks and can be targets themselves, given the significant amount of sensitive data they manage. According to a 2021 report, banks and credit unions experienced a whopping 1,300% increase in ransomware attacks by cyber criminals working with third parties to gain access to their networks and steal the sensitive information of financial institutions and their customers. This committee has held several hearings on cybersecurity threats in the financial sector and third-party risk. In 2017, we discussed the Equifax data breach that affected roughly half of all Americans. And in November of last year, we heard testimony from experts about ever-evolving cybersecurity threats to our financial system. A credit union witness at that hearing discussed how difficult it was to hold third-party vendors accountable and stated their support for NCUA to have authority of those providers. We also heard that smaller financial institutions rely on the same core service providers to support their operations. Consolidation is a particular concern, since 4 of those providers currently serve 78% of all banks, as well as many credit unions. The failure of any of these service providers could have consequences for the broader economy, but NCUA and FHFA lack authority to manage those risks. Additionally, when the NCUA testified before our task force on artificial intelligence earlier this month, they reaffirmed the need to pass this legislation to restore the NCUA's third-party vendor authority, stating that doing so would close a persistent and growing regulatory blind spot. So I would urge my colleagues to support Mr. Foster's bill and yield back the balance of my time. Is there further discussion? Further discussion of our amendment to H.R. 7022? If not, the question now occurs on providing the amendment in the nature of a substitute. All those in favor say aye.
Aye.
Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering H.R. 7022 as amended to be reported favorably to the House. All those in favor say aye.
Aye.
Those opposed, no.
No.
In the opinion of the chair, the ayes have it.
Madam Chair, I request a recorded vote on that.
A recorded vote has been requested pursuant to Section C5 of Committee Rule 3. The vote on this question is postponed. Okay, pursuant to notice, the chair now calls up H.R. 7196, the Flexibility in Addressing Rural Homelessness Act. The clerk will report the bill.
H.R. 7196, to amend the McKinney-Vento Homeless Assistance Act to expand the authorized activities under the continuum.
Without objection, the first reading of H.R. 7196 is dispensed with. The gentlewoman from Iowa, Ms. Axney, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 7196, offered by Mrs. Axney of Iowa. Strike all after the enacting clause.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentlewoman from Iowa for 5 minutes to explain the bill and her amendment.
Thank you, Chairwoman. The most recent point-in-time count forward that we have more than 580,000 Americans who are experiencing homelessness. That's up 5% from 2016, including more than 100,000 children. And that comes after significant progress over the last decade where we got almost 100,000 people into a home with a roof over their head. Getting back to making progress on that front is going to require that we understand the causes of homelessness. The high cost of housing is certainly one of the primary factors, and I'm committed to building more housing to bring those costs down. That said, however, we can also recognize the important differences in how different people and communities experience homelessness. One of those differences is that rural homelessness is very different from urban homelessness. Rural areas have less shelters, they're less conveniently located, and that leads to more people going through homelessness being unsheltered in rural areas. Housing in rural areas is older, it's often in need of repair because there's a heck of a lot less new construction. And the distances to travel and the areas covered by rural continuums of care and homeless service providers are far larger. That not only means greater travel times, it also means the staff for these organizations have to coordinate with a lot more local governments and groups. Homeless service providers in rural areas, both in Iowa and across the country, do a tremendous job to help make these people get to what they need to every single day. But too often they struggle with limited resources and programs that aren't designed to maximize the resources that they do have in rural America. So my bill, the Flexibility in Addressing Rural Homelessness Act, would solve the problem of these issues by giving rural areas more flexibility in using homelessness funding. Specifically, it allows them to use funding for 3 new purposes. First, for short-term lodging, including at motels or hotels, to deal with the lack of shelter in rural areas. In just the last 4 months in Iowa, we've seen temperatures of -18 degrees, we've seen tornadoes and hurricane-force winds, which just show how important it is to get people in shelter. Second, funding can now be used for repairs to upgrade unsafe housing because it makes no sense to provide more expensive shelter for someone after the fact, but not be able to repair the homes that they're currently in. And third, it provides funding for staff training and capacity building to make sure those groups have the staff they need to help in Iowa and across rural areas. Having the same continuum of care covering territories that are 6 hours apart, like in Iowa, or even further in other states, is going to require different work from their staff, and my bill gives those continuums of care the ability to support their staff in doing that. The flexibilities this bill provides would not increase costs at all. It would simply make sure that the money we are already providing is as useful as possible for the rural communities it's meant to serve. I'm happy to work on common sense ideas like this, and I want to thank Representative Lucas on his partnership in this effort. This by itself will not end homelessness, but it is a step forward that we can take right now to help our rural communities deal with homelessness. I urge a yes vote on this bill and yield back the balance of my time.
Thank you. The gentleman from Oklahoma, Mr. Lucas, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. And I'd like to speak in support of the Flexibility in Addressing Rural Housing Homelessness Act. While often more difficult to identify than in urban areas, families and individuals in small towns and rural communities are impacted by the problem of homelessness. However, those experience homelessness in rural communities face challenges that are unique to rural areas. These areas often lack the specialized services and shelters that are needed to address homelessness and must contend with longer distances needed to travel to reach servicers, and often have a much older supply of housing. Those experiencing homelessness in rural communities are also more likely to be families rather than individuals. This adds an additional layer of complexity to rural service providers when providing temporary housing. H.R. 7196 would allow additional flexibilities for rural service providers to provide greater assistance to homeless populations in rural communities. Rural service providers would be able to use federal homelessness assistance funds to pay for short-term housing in motels or shelters, or to repair existing housing, and for staff training activities and retention purposes. This will benefit our rural communities by equipping service providers with tools needed to address issues specific to rural America. Homelessness in rural areas looks different than homelessness in urban areas, and this legislation will allow HUD grants to be tailored to the needs of our small towns and communities. I'd like to thank Congresswoman Axne for her work on this legislation, and I urge my colleagues to support this sensible and straightforward bill. And with that, I yield back, Madam Chair.
Thank you very much. I
Madam Chair,
recognize myself for 5 minutes.
Madam Chair, I wanted to move to strike the last word.
Is that- The gentle lady from Texas is recognized for 5 minutes.
Thank you, Madam Chair, and I'll be brief. I just wanted to very, very strongly rise to support this bill. This legislation, which will allow rural areas to spend funds on their most pressing needs, and that's what's most important here, is it allows the rural areas to decide how to spend their dollars to their particular needs and their unique circumstances, because theirs are always very different than urban and suburban areas, such as increasing the number of affordable homes by funding repairs of broken ones, or funding to ensure quality lodging is available for Americans who have been displaced from their homes. I grew up on a farm in rural South Texas. I have seen firsthand what it's like to see people without homes struggle trying to find a way, particularly if they don't have any family members to provide any support. I come from an underserved community. I understand the struggles rural Americans in small towns face, as well as the relief that comes from having an effective government support. We must invest in all our communities. This bill does just that. I congratulate Ms. Axney on a great bill because this legislation would ensure underserved communities receive the investments they need to prosper. Thank you again to Ms. Axney and to you, Madam Chair, for bringing this forward. With that, I urge support of this bill, and I yield back.
Thank you. I recognize myself for 5 minutes. I want to thank Representative Axney for introducing H.R. 7196, the Flexibility in Addressing Rural Homelessness Act. While I don't have any rural areas in my district, it is no surprise to anyone listening that I'm deeply committed to ending homelessness in every community in our country. It is a tragedy for any person or families to be forced to sleep outside in tents or cars or other places not fit for human habitation. With H.R. 7196, I'm pleased to see that we've been able to work in a bipartisan way to address the particular issues facing rural communities that make it more difficult for homeless service providers to help people in need. So I commend Representatives Axney and Lucas for their work on this important issue and urge my colleagues to support H.R. 7196, and I yield back the balance of my time. Is there further discussion of or amendment to H.R. 7196? If not, the question now occurs on approving the amendment in the nature of a substitute. All those in favor say aye. Aye. Those opposed, no. In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering H.R. 7196 as amended to be reported favorably to the House. All those in favor say aye. Aye. Those opposed, no. In the opinion of the chair, the ayes have it. The ayes have it, and H.R. 7196 is agreed to. Pursuant to notice, the chair now calls up H.R. 7716, the Coordinating Substance Use and Homelessness Care Act of 2022. The clerk will report the bill.
H.R. 7716, a bill to help persons in the United States experience homelessness and significant behavioral health issues, including substance use disorders, by authorizing...
Without objection, the first reading of H.R. 7716 is dispensed with. The gentlewoman from Pennsylvania, Ms. Dean, the sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 7716 offered by Ms. Dean. Strike all after the enacting clause.
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentlewoman from Pennsylvania for 5 minutes to explain the bill and her amendment.
Thank you, Madam Chairwoman. I rise in support of my bill, H.R. 7716, and I thank the committee for its consideration. The bill is called the Coordinating Substance Use and Homelessness Care Act. As we all know, our nation has a homelessness crisis, with any one night more than 580,000 people experiencing homelessness. That's according to HUD's 2020 data, which is the latest complete data available due to the pandemic. While the lack of affordable housing is the primary driver of homelessness, research shows that behavioral health conditions, including substance use disorders, the disease of addiction, can exacerbate homelessness and can also be a consequence of homelessness. According to HUD data, more than 20% of the total homeless population is classified as severely mentally ill. Approximately 17% of the total homeless population suffers from chronic substance abuse. These numbers are staggering, and this is only the 2020 data. We've all seen the impact the last couple of years have had on our communities at every level. Our nation is experiencing a mental health crisis. Overdose deaths are at an all-time high. As the CDC recently reported, more than 107,000 Americans died of drug overdoses last year in a 12-month period, up tens of thousands of deaths. To me, this is personal. As some of you may know, my son Harry has struggled with opioid addiction and substance use disorder. While he has thankfully been in recovery for more than 9.5 years, his recovery has been made possible to access to critical supportive services, services that are out of reach for far too many people suffering from substance use disorder and experiencing homelessness in this country. The research irrefutably shows that safely and securely housing individuals who are experiencing both homelessness and behavioral health issues, such as substance use disorder or addiction, often requires supportive services and close coordination between housing and social service providers, in addition to low-barrier, affordable housing. Subsidized housing is critical, but we don't have enough. Access to additional voluntary person-centered support services is needed, and that's what this bill intends to do. However, behavioral services and homelessness services continue to be siloed in most communities, making it difficult for people to get the help they need. Strengthening the connections between agencies offering health services and those offering homeless services would allow stronger linkages and more streamlined care. By creating these connections, those who are homeless and have significant behavioral health issues like substance use disorder will be better cared for and have a better chance at both recovery and remaining stably housed and employed. Speaking as the mother of someone who has battled addiction, I know that reducing barriers and streamlining systems all across levels of recovery is the best way to prevent relapse and to strengthen the journey to recovery, not to mention to strengthen our communities. Which brings me back to my legislation. The bill would establish a HUD grant program to award 5-year grants up to $500,000 to help state and local governments, tribal entities, public housing agencies, and continuums of care improve their capacity to coordinate substance use disorder and homelessness services. This bill has support of key stakeholders, including the National Alliance to End Homelessness, the National Low Income Housing Coalition, and the Corporation for Supportive Housing. Also, I thank Senator Padilla. He plans to introduce companion legislation in the next couple weeks. I thank the Chairwoman and her staff for your guidance in support of crafting this legislation, and I ask my colleagues to join me in supporting this important coordinating bill. I yield back.
Thank you. The gentleman from Arkansas, Mr. Hill, is recognized for 5 minutes to strike the last word.
Indeed, I do strike the last word. Thank you, Chair Waters. Madam Chair, for several years now, Republicans have been talking about the inexorable link between substance abuse and behavioral health, mental health treatment, and our growing homelessness problem, particularly in our big cities and much of our urban arena. This connection might seem common sense, but too often it's been ignored how our federal programs implemented by HUD address homelessness. But hopefully this bill is a sign that perhaps that's changing. During his March State of the Union address, President Biden called for a new, quote, unity agenda, close quote, on which both sides of the aisle might be able to find consensus. And at the top of that list was a promise to end the opioid epidemic that lurks throughout all of our districts. It's an issue resulting in the senseless deaths of too many Americans each year through overdoses on drugs, like opioids that have been prescribed and misused, or fentanyl pouring across our open southwest border. So I certainly share Representative Dean's passion for finding solutions here across many different alternatives, and we all on this side of the aisle share the empathy and prayer with her and her son's fight against addiction and their family mission to make sure that he's free of this curse. Last year alone, drug overdose deaths reached an all-time high of 107,000, and I've been at too many funerals over the past few years, as have my kids, related to this crisis. So I was pleased to see that President Biden had the opioid crisis on his agenda. But it turns out the Biden administration's hopeful rhetoric doesn't always match its actions. In that same disconnect between those words and deeds, I believe, is on display here in the drafting of H.R. 7716. Instead of providing treatment, virtually all the funding in this bill would go towards, quote, capacity building, close quote, a vague, nebulous term my friends across the aisle frequently include in their legislation. What of this undefined term actually means is that plenty of taxpayer dollars are going to middlemen, suspiciously few positive outcomes, and no clear accountability or oversight as to how we're going to spend this money. The irony of this bill is that literally none of the grant funding authorized by this bill can actually be spent helping a substance-addicted or mentally health-affected person. Don't believe me? Well, take a look at the top of page 6. It actually says, open quote, none of the proceeds from the grants awarded pursuant to this act may be used to pay for health care, close quote. If this money will not actually be used to help a homeless person, then what would it be spent on? And that answer comes on the bottom of page 8, top of page 9, hiring a new, open quote, system coordinators, close quote, and paying administrative costs. What a waste. More rhetoric, less action. One positive aspect of this bill, however, can be found in the findings section, which repeatedly makes the connection between substance abuse or behavioral health issues and homelessness. This is precisely what Republicans have been saying for years, only to have those concerns dismissed by advocates of Housing First. The Housing First model cuts off homeless service providers who require addiction or mental health treatment as a condition of participation from federal funding, even if they have demonstrated successful track records. It's good to finally see a recognition of the obvious link between homelessness and addressing substance abuse, mental health issues, behavioral health issues, and the realizations of the flaws of a housing first only approach. Much like that entire premise, this bill overpromises and underdelivers, and in my view, Madam Chair, should be rejected. With that, I urge my colleagues to oppose the bill, and I yield back the balance of my time.
The gentlewoman from Texas, Ms. Garcia, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair, and I do want to strike the last word. I stand today in full support of H.R. 7716, the Coordinating Substance Use and Homelessness Care Act of 2022 by my friend, Congresswoman Dean. Substance use disorders can be both the cause and consequences of someone experiencing homelessness, as well as a factor that can complicate an individual's progress in getting back on their feet. That is why this is so crucial that we coordinate health care and homeless services. Among the 41.1 million people who needed treatment for substance use disorders, 6.5% of them received treatment at a specialty treatment facility over the previous year, and not for lack of trying. There are just too many barriers to treatment. Integrating these services will help providers on the ground achieve more optimal outcomes for people both experiencing homelessness and those struggling with addiction. We should adopt flexible and responsive approaches that help people find and follow a pathway to recovery. And we should always eliminate barriers and increase economic opportunities for people in recovery. So this bill does address a lot of the concerns that have been raised But to further talk about her bill, I yield the balance of my time to the sponsor, Ms. Dean.
I thank Ms. Garcia, my friend, and I thank you, Mr. Hill, for your serious concern about this issue. You rightly point out 107,000 people died in 12 months' time in this country. That is 300 people a day, every single day, Monday, Tuesday, Wednesday, Thursday, 365 days a year. I call it a jetliner a day. What happened when Boeing lost 2 jetliners, killing hundreds of souls? They landed the plane, they grounded it. They said, we have to not fly this plane until we figure out what is going so horribly wrong, that is stealing lives, taking them to the ground. We have to do this same very thing in America when we realize we're losing a jetliner a day of souls. So you're absolutely right, Mr. Hill. There is a prohibition on page 6, but if you read below, you see exactly who is eligible for these grant funds. The very people that are in the business of treating folks who are homeless and struggle with mental health or addiction. So the bill is actually to try to provide that connection for those who are homeless, who are struggling with either serious mental health issues or addiction, substance use disorder, which is a disease of the brain. And there are eligible governmental entities, Indian tribes, public housing agencies, continuum of care nonprofits, all kinds of state, local, county providers for these vital services. HUD is not in the business of doing mental health evaluations. So this is to connect people who are homeless and struggle with mental health disorder. This is a valuable program to connect people to HHS health programs, not simply housing programs. It is the connection that is missing. Come visit my area. I live in suburban Philadelphia, and I sometimes go down to an area called Kensington. It's a very struggled area filled with folks who are struggling with mental illness, folks who are struggling with addiction. We actually have something there called the Love Lot, where we try to help people connect to recovery, connect to housing, connect to food, to toiletries, to the basics of life. This would be a program that would connect these struggling souls who are struggling with homelessness, mental health disorders, and way too many with addiction, who suffer overdose and sadly death. This is the connection, one of the connections that folks need. So while I understand your concern, this is not just some idle giveaway. This is an important safety net and connection between those who are struggling with these two problems. With that, Madam Chair, I yield back.
Thank you very much. For what purpose does the gentleman from Arkansas seek recognition?
Madam Chair, I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed electronically. So did you work on this bill with her? I really, I really, oh, excuse me, I really. Okay, very good. Let's see, where were we? Have all members received the amendment? If so, I would like to preserve a point of order on the amendment. The clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 7716 offered by Mr. Hill of Arkansas. Page 8, strike line 21 and all that follows through.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes. Mr. Hill, you're on.
Thank you, Madam Chair. Is the amendment, I have an amendment at the desk, as we distributed it. Have we distributed the amendment?
Yes.
Okay. Well, Madam Chair, thank you. We have had a good discussion about how best to utilize taxpayer money to help in the homelessness community to fight back against addiction and the scourge on our society of addiction. And we have been discussing how best to do that, because there is no question that we all want to do that on both sides of the aisle. That's certainly not in question. In fact, in just a few days, Debbie Dingell, member of Congress from Michigan, and I have our co-prescribing bill, which will be before the Energy and Commerce Committee, which encourages the use of naloxone with any opioid medication that's prescribed in the country. 14 states have that. It's one of the key elements to reducing opioid deaths in our country. Senator Cotton and I have certainly increased penalties for dealing in fentanyl, and I was just in San Diego, Tijuana last week where I saw fentanyl coming out of a car rim already packaged in pill form that's headed to the streets of America for addiction. So no one here is, we all share the horror of the opioid crisis. My concern is here, in the way this bill is drafted, that we have the money going to capacity building and not to treatment for our homeless-related people. And we all have examples of these kinds of trends before, like our Housing Trust Fund, which we had billions and billions of dollars authorized, but it's built less than 1,000 new units of housing. And all of us have witnessed the Emergency Rental Assistance Program, which in turn was created by the COVID relief measures, which is still largely unspent. And due to the lack of proper oversight, IG is concerning and cautioning the GAO for misuse. So promising to help people and actually helping people is what we have a chance to focus on today. My amendment is simple. It just simply says that 90% of the funds in this legislation would actually benefit homeless individuals and allow only 10% to be used for administrative costs. That's a big improvement over the text of the bill, which right now not only allows but requires 100% of all the spending in this bill to go to the administrative costs that are used in these programs. Nowhere does the word low income mentioned anywhere, and so I think it's better use for us to focus on an amendment like this that has the money spent directly to benefit people seeking behavioral health and not simply use it for administrative expenses. And with that, Madam Chair, I yield back the balance of my time.
Is there further debate on the amendment? If not, the gentlewoman from Pennsylvania, Ms. Dean, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. And I just want to thank the gentleman for his amendment, for his concern that resources go to those who are suffering homelessness and addiction or mental health issues. And know that actually the spirit of this bill is to coordinate to overcome homelessness at the same time as helping people get into recovery programs or get them back into recovery programs. So actually, I don't believe this is necessary. About a poverty test, I'm not really sure if the person is homeless. I don't know what kind of test we have to do to confirm that they probably do not have the resources. So while I understand the spirit of this amendment, I would ask that we reject the amendment, and I do promise and want to sincerely work with you, Mr. Hill, and you, Mr. Budd, to make sure that this bill is as good as it can possibly be. One of the misconceptions I think that is out there is this notion that you have to get them into recovery first, not housed first. Actually, people who are homeless are less likely to succeed in recovery. So actually, having a roof over your head matters, whether you are ready for recovery, ready for help in the addictive process or not. So this chicken or egg, what comes first? At a baseline, anybody struggling with mental health issues, addiction, is only exacerbated by being without a home. So I ask folks to vote no on this amendment, yes on the bill, with a promise that I want to work with you. We can make a difference in this space. I yield back.
Thank you. Is there further debate on the amendment? I now recognize myself for 5 minutes. I oppose the amendment offered by Mr. Hill. H.R. 7716, offered by Ms. Dean, would help break down the institutional barriers preventing people who are experiencing both homelessness and substance use disorders from getting the health care they need. This is a very real problem in my district, where I have seen firsthand too many people struggling with homelessness and drug addiction run into difficulty when trying to access health services. We are dealing with an opiate epidemic today, but for decades, let me say that again, for decades, I've been sounding the alarm about substance abuse, particularly with regard to the devastating impact crack cocaine has had in the Black community. As a nation, we have failed to properly serve individuals with substance use disorders by labeling them, marginalizing them, and telling them to pull themselves up by their own bootstraps, none of which has prevented or reduced these substances use disorders. Treatment for substance use disorders, however, has proven effective. Having access to services is critical to ensuring individuals can address their underlying health issues as well as maintain housing stability. Unfortunately, because of institutional silos, there's often a lack of coordination between our homeless and healthcare systems, and homeless service providers don't always have the capacity or technical know-how to connect people experiencing homelessness and substance use disorders to the services they need to recover. The bill offered by Representative Dean helps address this problem by increasing our nation's capacity in bringing together housing and health services through better coordination between the systems. Unfortunately, Mr. Hill's amendment completely negates the purpose of this bill to build capacity among homeless service providers by limiting the amount of funds that could be used to build capacity. Mr. Hill is striking the very funds needed to better help them connect people experiencing homelessness and substance use disorders to the medical care they need. So I urge members to reject the Hill amendment, and I urge my colleagues to vote yes on the underlying bill. I'll yield back the balance of my time. Is there further debate on the amendment? If not, I withdraw my point of order. The question now occurs on the amendment. All those in favor of the amendment say aye.
Aye.
Those opposed, no.
As were the yeas and nays.
In the opinion of the chair, the noes have it, and the noes have it, and the amendment is not agreed to.
Madam Chair, I ask for the yeas and nays.
A recorded vote has been requested pursuant to the chair's previous order. The vote on this question is postponed. Is there further discussion?
Madam Chair.
Of R. Who seeks recognition?
Bar, Kentucky.
For what purpose does the gentleman from Kentucky seek recognition?
Madam Chair, I have an amendment at the desk.
We will pause to allow copies of the amendment to be distributed electronically. Have all members received the amendment? If so, I would like to preserve a point of order on the amendment. The clerk will report the amendment.
Amendment to the amendment in the nature of a substitute to H.R. 7716 offered by Mr. Barr of Kentucky. Page 9, strike line 4.
Without objection, the amendment will be considered as read. The gentleman is recognized for 5 minutes to explain the amendment.
Thank you, Madam Chair. And first, I want to commend Congresswoman Dean for offering this legislation. As I told her in the sidebar conversation, I think there's a whole lot of overlapping interest in this bill and real opportunity for bipartisan consensus. I know this issue is a personal one for her, and I appreciate her courage for sharing her own son's challenge to help others. I know they've co-authored a book about this together, and it's a real inspiration to everyone and so many Americans who have gone through this very similar struggle. As I told my friend from Pennsylvania, her advocacy for the underlying legislation, connecting housing to the services that are needed, the addiction recovery services, I just can't help but observe that she is making the most compelling case against Housing First. And what is Housing First? Housing First, as defined by the National Alliance to End Homelessness, is, quote, "This is what we mean by Housing First, that homelessness is a problem with a solution, and the solution is housing, period, for everyone, whether you follow the rules or not, whether you are compliant with treatment or not." Now, that is a model. Sometimes it might work, sometimes it might not. But there is another model. And the other model out there is the model that's followed by the organization that Congresswoman Dean's son works for, which is CAREN, the Clinical Services for Drugs and Alcohol. CAREN inpatient treatment is decidedly not Housing First, because the inpatient treatment is integrated fully with the actual addiction recovery services. And one needs only go to the website of this organization and hundreds, if not thousands, of other organizations, wonderful organizations that literally save lives, that exist in every single congressional district in America. But what is the one thing that those organizations have in common? They are categorically ineligible for HUD homelessness assistance, because they integrate housing with addiction services. So in the findings of this bill, my colleague makes several connections between the link between experiencing homelessness and behavioral health issues, including substance use disorder. The findings are many individuals with substance use disorder who experience homelessness have co-occurring illnesses. The combined effect of physical illness, mental illness, and lack of housing results in higher mortality rates for individuals experiencing homelessness. And critically, subsidized housing is critical, but not enough. That is the language in the findings of my friend from Pennsylvania's legislation. She's absolutely right. Success to additional voluntary person-centered supportive services is needed. I agree with the Congresswoman that subsidized housing is not enough. A recent study from UCLA found that 75% of unsheltered homeless have substance abuse disorders, 78% have mental health conditions, and 84% have physical health issues. The root causes of homelessness are much deeper than simply a lack of shelter, and we need to do more to help people. So I would love to work with her on this issue, particularly because currently Housing First policies at HUD completely cut off funding for housing providers that require supportive wraparound services. Both Democrats and Republicans in this room have service providers with excellent track records in their districts who cannot access HUD funding to expand the work they're doing. Each member on the Housing Subcommittee heard from the Doe Fund, located in New York City just a few months ago, about the success they have had in housing homeless individuals and requiring them to perform paid work. Yet still they are barred from receiving a single federal grant because their program includes job placement and workforce training. And that's the fallacy of making Housing First the housing-only policy. We should be rewarding success in transforming the lives of our nation's homeless, not enforcing a one-size-fits-all doctrine. Allowing non-Housing First providers, including the provider of Congresswoman Dean's son, to receive federal funding wouldn't result in people getting turned away from housing. It would simply result in more homeless service organizations being able to compete for federal funding and more homeless individuals who will be helped back on their feet. My amendment would allow that by reserving at least half of the funds for use by organizations that provide shelter and improve the lives and livelihoods of their clients, completely effectuating the intention of the author of the bill, connecting housing with the services, And I urge its adoption. And by the way, it's why I've introduced my legislation, the Housing Plus Act, that we cannot get into a markup. And so I would, beyond this bill, I offer to work with my friend from Pennsylvania to combine her idea with this Housing Plus concept. And I yield back.
Madam Chair.
The gentlewoman from Pennsylvania, Ms. Dean, is recognized for 5 minutes to strike the last word.
I thank you, Madam Chair, and I thank you, Mr. Barr, for your passion around this issue and for trying to make the bill better in your eyes. And I promise and pledge to work with you. I actually look forward to that. I think we can make a difference. But I have to speak in opposition to your amendment. And here's a couple of reasons why. Number one, I'm not really sure why Karen Treatment Centers has become such an important part of your conversation. They have saved many lives, but it is not the only model of treatment, and it is not something that everyone is aiming to go to. But I thank you for lifting them up and the good work that they do. When I spoke earlier, I said we have to think outside the box. We have to figure out how to land this plane that is killing 300 people every single day. That's what this legislation is all about. I think there are some flaws in the argument that you make, even though you and I think, want the exact same thing. I support Housing First, which the National Association to End Homelessness describes as a homeless assistance approach that prioritizes providing permanent housing to people experiencing homelessness, thus ending their homelessness, serving as a platform from which they can pursue recovery, personal goals, employment, quality of life. In other words, stable housing is a prerequisite foundation, not a reward for taking advantage of wraparound services. We shouldn't give it out as a gift or a reward. If stably housed, a person can better take advantage of wraparound services, recovery services. People need a roof over their head to succeed in recovery, trust me. Requirements that make treatment, sobriety, or acceptance of services a precondition for housing assistance are counterproductive. It's as though it's a test. You can only have a house if you can prove that you are not addicted. But addiction doesn't work like that. It shows a fundamental misunderstanding of the disease of addiction. For example, in your bill, you say distribution of the funds, eligible grantee receive the funds, shall distribute, blah, 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 blah. It would require as a condition for occupancy in a project or assistance from a program, project, or activity that assisted individuals meet certain prerequisites such as sobriety or lack of drug use or engage in counseling, job training, addiction treatment, mental or behavioral health services. I know that's well-intended. It doesn't speak to what actually happens with an addicted brain. Not everybody who is homeless and addicted is ready for help at this minute, but we got to get them housed, try to save their lives until they get themselves ready for treatment. So a test to give people housing, I think, is just fundamentally misunderstanding the disease of addiction. And this is something I've been trying to fight. Addiction isn't a moral failure. And so you got to be tested out of it. You got to prove to us you're not an addict anymore before we'll make sure you have a roof over your head. We have to fight those crazy stigmas. People deserve to be treated with humanity, addicted, mentally ill, or not. And so while this is well-intended, I think it misses the point completely in terms of tests, moral tests for people, in terms of just basically allowing them housing to connect to services. With that, I ask that folks vote no on this amendment.
The gentleman from Georgia, Mr. Loudermilk, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I'd like to yield my time to the gentleman from Kentucky, Mr. Barr.
Well, thank you to the gentleman from Georgia. And again, I want to reiterate, I do think that there's a lot of opportunity for overlapping interest and conversation here about how we can combine our efforts and enlarge the number of providers available to help people who are struggling with addiction. 107,000 of our fellow countrymen are not with us right now because they have succumbed to addiction in 1 year. So why on earth would we be advocating for limiting the number of providers that can help people? Housing First may help some people. And the idea of Housing First is that there's no conditions, none. Nothing is required of the individual receiving housing assistance. All they have to do is have a roof over their head, and that's it. And there can be no reciprocal commitments made by the individual receiving that assistance. And you know, for some of those individuals who are struggling, you know, God bless them because they have the courage to want to get help themselves. And I know these people, they've struggled through it, and it takes a lot of personal sacrifice and will to overcome these kind of powerful opioid addictions on their own with no help. But the reality is that's not how addiction works. The reality is, in my district, in the organizations that provide for individuals who are struggling with this very powerful addiction, is that these individuals cannot do it by themselves. And Housing First is this crazy idea that we're just going to put someone who's got a serious addiction in a subsidized house and not help them. And that is wrong because it doesn't work. What works is intensive services, long-term services, addiction counseling, recovery housing, meaning that there are connected. And yes, there are some organizations, not-for-profit organizations with an incredibly successful track record in every congressional district in this country that do, in fact, provide some tough love. And what they say to individuals struggling with addiction, including many in my district, whose lives have been saved by this, they require as a condition for continuation in the program that they work with other individuals who struggle with addiction. You can have this housing, and we want you to stay, and we're going to love you, but you've got to listen to other individuals who have gone through this program, and you got to do peer-to-peer with them as a condition of being part of this program. And it's that assistance from others who have gone through the same struggle. That's what works. That's what saves lives. Not just putting someone in a subsidized apartment and walking away. That does not work. At least that's what my constituents tell me. And so let's connect these two the way that the gentlelady says we want to by offering not just the Housing First concept, and I'm not trying to do away with the Housing First concept. I'm just saying let's provide some other organizations the same opportunity, specifically organizations that require, as part of their program, that you go through AA, that you go through NA, that you go through a multi-step program, addiction counseling, sobriety requirements. And there's another dimension to this too. In my district, there's a great women and children shelter that is not Housing First and therefore not eligible for federal assistance. And the ladies who were in this, who are pleading to me to help them get some federal funding, they begged me not to require the shelter to bring in actively addicted people because their recovery depended on them being in a sober place with other sober people. And Housing First doesn't allow that. It doesn't require that everyone in the facility remain sober and on the road to recovery. And that's the best way for people to slip up and relapse. So look, I think we all want the same thing here, but the idea that with a crisis of this magnitude on our hands, we're going to limit the scope of the providers available to actually provide, help to people does not make intuitive sense to me. That's why I've offered the Housing Plus Act that would provide at least some of the continuum of care funds to these organizations that don't do Housing First. And that's why I offered this amendment. And I urge my colleagues to support this to enlarge the number of organizations that can help save lives. And I yield back.
Thank you. The gentleman from Illinois, Mr. Garcia, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I move to strike the last word and yield my time to Representative Dean so that she may respond.
I thank the gentleman. Again, I thank you for what you're trying to do. There's maybe a gap in what you're perceiving here. Would you say to someone who is homeless and suffers from a severe mental illness, you're welcome for housing as long as you stop being severely mentally ill? That's the difference between this and addiction. Addiction isn't a choice. And there are many people who are profoundly addicted now, not ready to be just told, you got to go into treatment now, you got to go now. And how do we keep them alive to the point where they will get into treatment? They will get into recovery. If we leave them homeless, they are more likely to be on the streets and overdose and die. So it's this population of people potentially not yet ready for recovery. At a basic human level, we have to get them housed. And then literally, that's the point of this bill, coordinate, not abandon them, not say, here's subsidized housing, you're on your own, keep using. Literally to coordinate them to that recovery we desperately need them to get. That's all I want to say.
Would the gentlelady yield?
Yes, certainly.
Would the gentleman yield, the gentleman who has the time?
I yield.
I'll be brief. I appreciate what you're saying. I really do. And I think there's a role to play for these coordinators that you're advocating for. Let's do that. But let's also have an opportunity to expand the number of housing providers out there that do this different model other than Housing First that actually works. And you made me a very generous offer for me to come to Philadelphia and visit with some of your constituents. I want to invite you, and Mr. Hill, I know, would want to invite you to his district, to the Doe Fund in New York, to my district. There's a number of organizations in my district. St. James Place, for example, for homeless veteran men, many substance use disorders in that population, in that facility. The Hope Center, there's Isaiah House, the Shepherd's House in my district. And these organizations, there's a tough love component to it, where they say, you know what, you do need housing, and we want you to have housing, but you know what, as part of that housing, you're gonna have to do our program. You're gonna have to be with this program. And I know it's gonna be hard, but you're gonna be with our program with other men and women who have struggled in the same way.
Reclaiming my time, yield to Representative Dean.
I take you up on your invitation, both of you. I'd love to visit. I'd love you to visit. We have extraordinary providers in our area, but we have extraordinary need. I was last month at the funeral of the son of a friend of mine, and I wear this bracelet for Jake. And when I went up to the parents, we've been talking with them, trying to help them over the years for this extraordinarily amazing young man who died as a result of addiction, the disease of addiction. And they hugged me so hard and said, we have to do more. We have to do more at the federal level. This is part of that attempt to do more. So I look forward to working with you. I look forward to working with Mr. Hill, anybody else on this, and I thank you, Madam Chair. I yield back.
Thank you. Is there further discussion on the amendment? I now recognize myself for 5 minutes. I oppose the amendment offered by Mr. Barr. The Housing First approach is a proven, bipartisan, and evidence-based solution to address homelessness and diminish the cost of doing so in order to help the most people possible. In fact, when the George W. Bush administration adopted the Housing First approach, it helped spur a 30% reduction in homelessness from 2005 to 2007. Alternatively, when the Trump administration failed to make the necessary investments in affordable housing, focusing instead on vilifying people living on the streets and threatening to lock them up in federal facilities, the homeless population increased to more than 570,000 people, with unsheltered homelessness seeing the greatest spikes. Housing First ensures that households are provided with housing assistance and services without any preconditions. This approach acknowledges that housing is a necessary platform for achieving other successful outcomes, whether it be unemployment, sobriety, or something else. And this approach has been substantiated by decades of research that demonstrate that requiring preconditions to housing assistance like employment or sobriety are counterproductive. When housing providers say that you have to stay on the streets until you are sober or employed, it can serve to perpetuate homelessness. It essentially puts the cart before the horse. If you think it's hard to become sober, it's even harder when you're told to stay outside in the cold. There's often a misunderstanding that Housing First does not include services. This is just plain wrong. Nothing about the Housing First approach precludes the provision of services alongside housing assistance. The distinction is that the Housing First offers services on a voluntary basis, while non-Housing First approaches often force participants into services, meaning a person will lose their shelter if they do not participate. Not only are Housing First interventions effective in ending homelessness, they're the most economically efficient interventions we have. Studies show that Housing First is cheaper than allowing people to remain homeless and allowing them to rely on other public resources like emergency rooms. HUD has sought to incentivize recipients of homeless assistance grants to move to a Housing First approach while leaving sufficient flexibility for recipients to make exceptions in limited cases where it might be appropriate for health and safety reasons. So I urge members to reject the Barr amendment and urge my colleagues to vote yes on Ms. Dean's bill. I yield back the balance of my time. Without objection? Nope. If there's further debate on the amendment, if not, I withdraw my point of order. The question now occurs on the amendment, and all those in favor of the amendment
Madam
say
Chair.
aye.
Move to strike last word.
Gentleman from Missouri is recognized for 5 minutes to strike the last word.
Madam Chair, in response to a couple of comments that you made, here is a quote from the National Alliance to End Homelessness. It says, "This is what we mean by housing first, that homelessness is a problem with a solution, and that the solution is housing for everyone, whether you follow the rules or not, whether you are compliant with treatment or not." I think that that says it all. I'll yield to the gentleman from Arkansas.
I think you bring up a stark contrast there with that comment, and I think that's one of the key issues of the debate here. And again, it gets back to a point I think that Mr. Barr made, which is the exclusion of those people who are making these choices. And don't forget, Madam Chair, there are a lot of people who have reached a point. I think Ms. Dean makes a key point about homelessness people who have not reached the point or ability to get into recovery or even into treatment. It's I've interviewed people in jail in my district. They've started a recovery program 50 times, 50 times, and failed each of those times. So this is tough. But to the comment that Mr. Barr is making, in starkly contrast from Mr. Luetkemeyer, is there are people who are ready to get housing and services and want to participate in that. They are compliant. But the people offering those services are denied the federal services to do that because of this comment that the gentleman from Missouri made out, which is it's housing first, housing first, housing first. The heck with it if you have any conditionality around it. It even takes away the people who are ready and want to partner with that for-profit or nonprofit. So I thank the gentleman from Missouri, and let me yield back to the gentleman from Missouri.
Thank you, the gentleman from Arkansas. With that, I'd like to yield some time to the gentleman from Kentucky, Mr. Barr.
And just to conclude the point and follow up Mr. Hill's point, it's not about this being a moral test. It's to the point that this is such a powerful addiction that you have individuals who for 50 times relapse and it's not working for them. And one of the reasons it might not be working for them is because they go to a 30-day detox or they come out of jail and there's nothing there for them and they go to an apartment. Maybe it's a HUD subsidized apartment, but there's nothing else. And so they fail. What works is when there's a little tough love. Not saying morally judging them, but saying, look, here's the deal. You get to come here. You want to get into long-term recovery. You say you want to. But if you want to, you have to do our program. And by the way, we're not going to leave you alone. You're going to be surrounded by other people who have gone through the same difficulty that you have. That works. That's the process that works. But this idea from Housing First that whether you're compliant or not, you get free stuff. That leads to failure, relapse, and continued addiction, and sadly, sometimes fatal outcomes. What we want is what works for people in recovery, and that is intense peer support. And that requires something of the participant. That's what we're advocating. Now, that may not work for everybody, and maybe for some people who have a heck of a willpower, they can do Housing First and voluntarily go through a program. And with your connecting services, that might become even easier, and I applaud you for looking at that pathway. But to categorically exclude these other organizations seems to me wrongheaded and short-sighted when this is a huge problem, and we know that many of these non-Housing First, faith-based, not-for-profit organizations are doing great work and saving lives. So, look, why can't we have it all? Why can't we have Congresswoman Dean's coordinators? Why can't we have Housing First? And why can't we also have non-Housing First that integrates this alternative to Housing First that says, you know, we're going to require something of the participant in exchange for their housing. Because in the experience of many of these organizations, which are in all of our districts, that is what truly works. I yield.
I yield back the balance of my time, Madam Chair.
As I said, I oppose this amendment. Is there further debate on the amendment? If not, I withdraw my point of order. The question now occurs on the amendment. All those in favor of the amendment, say aye.
Aye.
Those opposed?
No.
In the opinion of the chair, the noes have it, and the noes have it, and the amendment is not.
As for roll call vote.
A recorded vote has been requested. Pursuant to the chair's previous order, the vote on this question is postponed. Is there further discussion of or amendment to the amendment in the nature of a substitute? If there are no further amendments, without objection, the previous question is ordered on H.R. 7716, and pursuant to Section C5 of Committee Rule 3, further proceedings on the pending amendments are postponed. Pursuant to notice, the chair now calls upon H.R. 4395, the Payment Choice Act of 2022. The clerk will report the bill.
H.R. 4395, a bill to prohibit retail businesses from refusing cash payments and for other purposes. Be it enacted by the Senate and House of Representatives of the United States of America and Congress assembled. Section 1, short title.
Without objection, the first reading of H.R. 4395 is dispensed with. The gentlewoman from Texas, Ms. Garcia, who is a lead co-sponsor of the bill, has an amendment in the nature of a substitute, copies of which have been distributed in advance to all members and also on the dais. The clerk will read the amendment.
Amendment in the nature of a substitute to H.R. 4395, offered by Ms. Garcia of Texas. Strike all after the...
Without objection, the amendment in the nature of a substitute will be considered as read and considered base text for purposes of further amendment. I now recognize the gentlewoman from Texas for 5 minutes to explain the bill and her amendment.
Thank you, Madam Chair, and thank you for bringing this very important bill forward. Madam Chairwoman, cash is king. It always has been. So today I stand in support of H.R. 4395, the Payment Choice Act, a bill which I am proud to co-lead with my colleague from New Jersey, Congressman Payne. This legislation will protect American cash currency as a form of payment for goods and services. This applies to any retail business who accepts in-person payments at a physical location and only applies to transactions up to $2,000. Cash-paying customers will also be protected from being charged a higher price. There are safe harbors exemptions currently for cashless retailers, so no business is harmed as they transition back to accepting cash. Right now, there are over 50 million Americans, 50 million Americans who lack a bank account or credit card. They rely on cash to buy necessities like food and water, Girl Scout cookies, or to fill their baskets at church when they come by for offerings. If cash is banned, these Americans will be completely barred from participating fully in our economy. I guess they would have to run around with one of those little square things to try to find a way to get a credit card. Every American has a right to use cash in retail establishments. In a world of growing cyber attacks and private data breaches, many feel that keeping cash is, frankly, their safest, most private option. Americans are choosing not to subject their financial data to hacks or mining by big banks. And we as members of this committee should protect this choice. Banning cash excludes millions of Americans and leaves digital payments as the only option, which are vulnerable to hacks and breaches of privacy. Prohibiting cash payments at worst denies consumers the right to the payment of their choice. At least it is an inconvenience for consumers who need cash to purchase their essentials, again, like groceries or gasoline, or buying those Girl Scout cookies, or again, put in money in the basket when they come by for donations at any charitable event. We must preserve the right of Americans to pay in cash. Cash is king, always has been, and always should be. This is a common sense bill intended to help consumers and provide consumers choices. Again, Madam Chair, thank you for bringing this bill forward. I urge support of this bill, and I yield back the balance of my time.
Thank you. The gentleman from Missouri, Mr. Lukemeyer, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chair, and I do move to strike the last word, and I do also ask unanimous consent to insert a statement by the ranking member McHenry that is in opposition to the bill. And I have a letter from the National Federation of Independent Businesses, also in opposition to the bill that I'd like to have inserted in the record.
Without objection, such is the order.
Thank you, Madam Chair. Where I come from, back in the hills near the Lake of the Ozarks, cash is, for lack of a better word, king. It is still preferred by many individuals for its ease of use, anonymity, and immediacy in transferring money. For those reasons, I understand why my colleagues on both sides of the aisle are supporting this legislation. However, I'm concerned this bill places big government in the day-to-day operation of American businesses. The great thing about the American economic model is that it allows for flexibility and economic freedom. There are nearly endless types of business models in this country. You have S-corps, partnerships, C-corps, cash accounting versus accrual accounting, businesses with employees, others with contractors. There are countless different ways to make up a business model. Over the past few years, many businesses have chosen to move towards a model that does not accept cash. While I personally am not supportive of retailers to take this stance, it's really inconvenient for me because I do not like that personally. I don't think it is the role of government to step in and dictate the business model of Main Street retailers. Consumers have the power to choose where they want to buy goods and services. For instance, I will probably not frequent a place that does not take cash, but if they want to go ahead and do that, that's their choice. I don't think that we should be dictating how they do that. According to San Francisco Fed in 2020, cash accounted for 19% of all payments, with nearly 1 in 5 transactions being conducted in cash. It is extremely unlikely we will see a mass exodus of retailers from accepting cash. Furthermore, in neighborhoods where cash is more prevalent than others, businesses are even more likely to accept cash. And let's not forget that forcing businesses to accept cash will not only affect a business's model, but accepting cash has a direct cost as well. According to a study from global research and advisory firm IHL Group, cash can cost merchants between 4.7 and 15.1% charge. Not to mention the additional physical risks associated with cash. Just ask our good friend from Colorado, Mr. Perlmutter, who is here today. about the risk associated with carrying large sums of money, especially at the dispensaries there in Colorado. The truth of the matter is, if there are a lot of individuals who want to pay with cash, the business will eventually accept cash. No business wants to lose customers. The idea of prohibiting cashless businesses is not a new one. Cities like New York, Philadelphia, San Francisco, and the state of New Jersey have all recently passed similar laws. And Massachusetts has required businesses to accept cash since 1978. However, Idaho, Mississippi, and North Dakota considered legislation requiring businesses to accept cash and rejected those proposals. I see no reason why the federal government should override state legislatures who decided not to force this requirement onto businesses. Surely Idaho, Mississippi, and North Dakota know what is better for their business communities than us sitting here in Washington, D.C. Again, my personal preference is for a business to accept cash. It is an important method of payment that many individuals from my district value and appreciate, but I cannot support legislation that increases the role of federal government in the daily operations of small businesses, which I am bound to protect. With that, Madam Chair, I yield back.
The gentleman from Ohio, Mr. Davidson, is recognized for 5 minutes to strike the last word.
Thank you, Madam Chairwoman. I do move to strike the last word. And I ask my colleagues to support this bill, even if you came here thinking that you ought not support this bill. You know, the legal tender of the United States is the U.S. dollar. It says it right here on its face. It says, "This note is legal tender for all debts, public and private." It is the legal tender, not Visa or MasterCard, not some ACH or Venmo or anything else. And as the ranking member of the FinTech Task Force, I couldn't be more supportive of FinTech, but we can't undermine cash. Fundamentally, we should be trying to preserve the value of this dollar in every way possible. We should be trying to preserve the characteristics of this dollar as we become more entrenched in a FinTech world. So what is the nature of it? Well, it's permissionless. If I want to give $1 to my colleague in exchange for something, I don't need to get permission from a bank. I don't have somebody that's going to track it or trace it or steal my identity or his. These are the characteristics that we should have to our money. Money shouldn't be used as a means of coercion or control. It should be a store of value, a unit of account, a record of account, and a means of exchange. It should have 3 basic principles. The U.S. dollar has that, and it has it when it's in cash. Unfortunately, we find so many laws forced our countrymen to have accounts, an account-based relationship, which really, once you put this dollar in a bank, it's not really your dollar anymore. You've got a claim to the dollar, but it's not your dollar. In fact, they lend it out. Fractional reserve banking is why we have insurance. They don't even have your cash. And when you go to the bank and say, "I would like to have my cash, please," they spy on you. Well, why do you need the cash? What are you going to do with it? It's none of your business. It's my cash. And we've made it almost illegal because of all the spying from all the special people that our government forces to spy on them. No wonder so many people distrust banks. And they keep their money in cash. They don't want an account because they know the system has become ingrained with the government, with big business. Big business and big government are marching lockstep towards exerting coercion and control over our country. We saw in Canada, when people wanted to engage in speech, now they have a different system in Canada, the Trudeau government wanted to freeze bank accounts. Well, one defense against that is having cash. They wanted to coerce businesses to not transact with people. They wanted to essentially implement a system of social credit. If you're a compliant, submissive citizen, then you could spend your money that you no longer have custody of, that you just have a claim to at the bank. So really, every way that you have to store your wealth depends on a government permission or the bank's permission. You're essentially in a multi-factor custody arrangement once you part with your cash and put it in a financial institution in our country. So we have to protect the value of this dollar. We have to honor it as the legal tender of our currency of our country, And frankly, we should be looking to preserve its characteristics as we develop financial technology. For that reason, we introduced the Keep Your Coins Act, which would say that you inherently have a right to self-custody of cryptocurrency, just like you have a right to possess cash. Now, civil asset forfeiture is a related thing. Many of our countrymen find themselves traveling with some cash, and we perversely flip our Constitution on its head. They've, under civil asset forfeiture, not even charged with a crime, law enforcement steals your money and then makes you prove it's yours, and not only that it was yours, that you legally obtained it in order to get it back. Well, you don't have the money anymore, so how are you supposed to prove it? They prey on poor people. They prey on people that are in vulnerable situations, and they violate our Constitution. It's unjust, it's immoral, it's unconstitutional. Our Supreme Court hasn't thoroughly acted, but we should be defending that here. I ask everyone to vote for it. I yield.
Thank you. The gentleman from Illinois, Mr. Garcia, is now recognized for 5 minutes to strike the last word.
Thank you, Madam Chair. I move to strike the last word and yield my time to the gentlelady from Texas.
Thank you to the gentleman from Illinois, and I also want to thank the gentleman from, well, I actually forget your state, Mr. Davison, Ohio, because quite frankly, I couldn't have said it better. A lot of what he said I agree with. You know, people have a right to have their cash in their pocket. I mean, that's what it's all about, is having money in your pocket. You can spend it any way you want to. You want to be able to go to any store. And Madam Chair, you know, I've been to the airport, a couple of airports where there's signs that says only credit cards. I've seen people get off flights that go straight to the snack area, and the one thing they want is that Coke or that beverage to cool off and relax. And the guy didn't have a credit card. I felt so bad for him because he tried to argue with him, and the poor clerk said, "Sir, I'm just sorry." And he said, "Look, I'll just give you the 10 and keep the change if you don't have change." And he was just told, "No, we don't take cash." So it wasn't even a question of not having a way to make the change. They just don't want to take cash. So I don't know what that's about, because, you know, when I grew up, cash was king. And in fact, you went to some businesses, you'd get a cash discount if you used cash. So really, it's almost un-American to think that we would not allow people to use cash. And this bill does not prohibit businesses from accepting credit card payments or debit cards. It rather provides just another method of payment, offering increasing consumer options. This is all it is. We want to make sure that this option stays. I know when I was county commissioner, I almost went ballistic when the Toll Road Authority wanted to make all tolls just by a credit card. And I said, what about all the poor working stiffs who can't get a credit card because they don't qualify? What about people that are poor that all they have is the change in their pocket? You're not going to let them use the toll road system because they don't have a credit card? That's crazy. I was able to stop that. And I want to be able to make sure that in this country, we do honor our dollar and that we always make it the supreme and the king of all currency. And many people agree. We have 39 organizations that have supported this bill, including the Americans for Financial Reforms, Center for Economic Integrity, Chicago Consumer Coalition, the Consumer Federation of America, Consumer Federation of, on and on. And I do want to particularly submit this for the record. The National Armored Car Association, I'd like to ask unanimous consent to enter this in the record.
Without objection, such is the order.
And I'll enter some of the others if need, Madam Chair. But, you know, this is just a common sense bill. And frankly, I would never even imagine that I would be on the United States Congress fighting to make sure people accepted the dollar. I mean, isn't that almost crazy? Some of the audience are agreeing with me. I mean, I can't believe we would have to do this. But we have to, because not everybody can get a credit card or debit card, and people are just afraid of what's going to happen to that information once the credit card companies and everybody else that share our data with are going to do with it. So with that, I yield back and I ask
Would the
everyone to
gen-
please.
would the gentleman
vote for this
yield?
bill. I yield back to Mr. Garcia.
I yield.
Would the gentleman yield time?
Yes, I do.
One of the provisions that people have criticized, and I'm not a huge fan of the amendment that compels businesses to put some means of exchange where you could take your cash and convert it into a prepaid card, so then you could use the card. Well, what you think of is anything you put in place has to have an enforcement mechanism. This is a really simple enforcement mechanism. If you walk into the business and they don't take cash, then you say, oh, okay, well, where's your machine where I can put my cash in and get a prepaid card? And they don't have one. Well, now you have an enforcement mechanism. Now, I don't like that because it forces businesses to make a choice, but it's better than almost everything. Lots of plans that come forward out of this body would set up a separate agency to track it or something else. This is real simple. It is onerous in the sense that it creates a high cost if you want to put one of these machines in your business. But the simple thing is just take cash. And I'd support the bill if it was just in that simple form. But I don't love the amendment, but I do appreciate the simplicity of it as an enforcement mechanism. I yield back to the gentleman.
Yield back.
The gentleman from Wisconsin's Mr. Stile is recognized for 5 minutes to strike the last word.
Thank you very much, Madam Chairwoman. I do have to rise to speak against this bill. We often watch in Washington folks put forward ideas, and I think being able to use cash at a business is a fine thing, obviously. But to look for the federal government to step in and make one-size-fits-all rules to every business in the United States, I think is a step in the wrong direction and stifles innovation. When you look at Section 5104 is drafted, any retail establishment that accepts payments at a physical location and then sets forward the requirements of this given business with a private cause of action in federal court, which we can get into a whole discussion about how this just really tees up trial attorneys. But if we think about the number of businesses that we have in the United States, in particular some of our small businesses that both provide goods at a physical location but also sell goods on the internet, you can just begin to think through how this would stifle innovation. So you might be able to walk into your local store, you might be able to transact, they may accept cash today. If they're doing a sale online, for all sorts of obvious defrauding reasons, they may choose not to utilize and provide cash as an option for that online transaction so that somebody's not mailing in cash like we're ordering from a Sears catalog book from 100 years ago. And so as we look at this, it is a solution in search of a problem in many ways. I think it fails to take account the real serious situation that many of these sophisticated businesses are innovating in creative and clever ways to make sure that commerce in the United States is as efficient as possible. We could think of something as simplistic as going to an event with Eventbrite, where you can physically walk into the event, but they're going to make the payments done through a digital format. There's all sorts of innovation in this space to create a one-size-fits-all government approach. Not only is heavy-handed, I think it's foolhardy, followed by the private right of action in federal court for consumers who are aggrieved, I think is actually a very foolish mechanism to even enforce this bill, although I don't support the bill in the first place. When we look at private causes of action like this in federal court, I think there's a real conversation we should be having about setting up that as the mechanism to enforce this bill, although I think the underlying bill is poorly structured and drafted. I also think the structure that gives the carve-outs in this really is driven by an intention to push forward ATMs at additional locations. I think we should think about the benefit of that by putting in force, effectively mandating it to a business that doesn't want to fall under the draconian rules set forward in 5104. And so those are my concerns. Madam Chair, I recommend my colleagues to vote against this bill, and I will yield back.
Thank you very much. The gentleman from Tennessee, Mr. Rose, is recognized for 5 minutes to strike the last word.
Thank you, Chairwoman Waters. I move to strike the last word. Some of you may recall, and my colleague Warren Davidson made essentially the same point a few moments ago, when we were holding hearings to examine Facebook's proposed cryptocurrency, Libra, Congressman Sean Duffy held up a $20 bill, not unlike the one that I have right here, and said everybody can use a $20 bill. A $20 bill doesn't discriminate. You can say horrible things, you can say great things, but no matter what, a $20 bill can be used by every single person that possesses it. Moving towards a cashless society where businesses only accept debit and credit cards or maybe some other form of electronic payment will fall hardest on the most vulnerable Americans and give big technology firms and, dare I say, government and card processors more control over who may participate in our economy. And we don't have to speculate about whether that will happen. We have ample evidence around the world that it is already happening. While technological innovations can be exciting, and especially in the payment space, how we spend our money is very powerful information. And for those who have concerns about how that information is being collected, furnished, sold, and distributed by third parties, we must maintain a cash option. Madam Chairwoman, currently there are 55 million Americans who lack access to a bank account or credit card and need to use cash to pay for their necessities. Or perhaps they choose to use cash to pay for their necessities out of a fear of their privacy being invaded. During the pandemic, the number of businesses that refused to take cash became more widespread, putting these millions of Americans at a decided disadvantage. All consumers should have the freedom to pay with cash at grocery stores, restaurants, and businesses, especially those who lack access to traditional banking services. I am proud to be an original co-sponsor of this legislation, which would ensure that the words printed on our currency remain true, that our currency is legal tender for all debts, public and private. I urge my colleagues to vote yes on the Payment Choice Act, and I yield back the balance of my time, or I'd be happy to yield to you, Ms. Garcia.
Well, thank you to the gentleman for yielding, and thank you so much, Mr. Rose, for your support on this bill. And I think you're absolutely right. It should be up to the consumer who's got the dollars in their hand, and this bill does not encourage or incentivize any business to have an ATM. I mean, why would you need an ATM if you have cash in your hand? This bill is about protecting the options and making sure that we do that. And anybody who thinks that this applies to online shopping just hasn't read the bill. It is for in-person transactions less than $2,000. So this is about protecting working families. As I said earlier, the workers, the poor people, not so poor people, but people who just choose to use cash. Again, we should be offering discounts and applauding the people who continue to use cash rather than creating obstacles. And Madam Chair, with that, I yield back to Mr. Rose. It's his time, but I urge everyone to please, let's help those consumers, the 50 million Americans who do not have a bank account, who do not have a credit card, and who do not have a debit card. Some may not be eligible to get them, some may not want them, and some may not even want to hassle with them. Some just don't want to be hassled because they have them. So again, I urge everyone to support this bill. It's a good bill by Mr. Payne, and I too may proud lead sponsor with him. With that, I yield back to Mr. Rose if he has any more to add.
Thank you, Representative Garcia. I would just mention, and this has come to light over the last many weeks and months as I've thought about this bill, but today, if you go to a Vanderbilt University athletic event, or a Tennessee Titans game, or a Nashville Soccer Club game, or you go to the Ascend Amphitheater in Nashville, which is run by Live Nation, currently, if you don't have some means of electronic payment, you can't get any food there. You can't buy anything at those events. And I think, certainly those may not be the most dire circumstances where cash is required. But I believe that this bill is worthy and deserves our consideration, and I ask my colleagues to vote yes. Thank you, and I yield back.
Thank you very much. I recognize myself for 5 minutes. This is a no-brainer for me. I want to thank Representative Payne for offering H.R. 4395, the Payment Choice Act of 2022. And I certainly want to thank Representative Sylvia Garcia of Texas, who co-leads this bill. And this will be the first time that I ever supported anything Mr. Rose or Mr. Davidson had put support. This bill.
Wait, what?
Thank you, Mr. Rose. Thank you, Mr. Davis. This is the first time, it may be the last. This bill, which has strong bipartisan support, will ensure that all consumers have the right to use cash at retail establishments, which is an important consumer protection, especially as most businesses are choosing to go cash-free. With the Payment Choice Act, we are fighting for the grandmother who does not have a debit or credit card, but whose neighborhood store does not accept cash, making it harder for her to obtain the necessities she needs. We're fighting for the person with only $5 in cash in their pocket who simply wants to buy lunch in their neighborhood and should not have to go searching for a store that still accepts cash. We're fighting for people who choose to use their hard-earned U.S. dollar bills for whatever lawful purposes they desire, promoting financial inclusion in urban and rural areas throughout our nation. Cash is integral to protect consumer privacy and to ensure that the unbanked and underbanked are not discriminated against when they try to make purchases with cash because they do not have access to debit or credit cards. About 5%, or nearly 13 million adults in the United States, were unbanked in 2020 and may lack access to forms of payment like debit and credit cards. The problem is worse for households of color. 13% of Black households and 9% of Hispanic households had no bank accounts in 2020. Rural households are also more likely to be unbanked than urban households. Retail businesses would still have the flexibility to accept digital payments, but ensuring consumers can pay in cash is an important protection that several states and cities across the country already require, like New Jersey, Montana, Massachusetts, New York City, Philadelphia, and San Francisco. This is a strong bill, and I urge members to support 4395. My mother died at 97 years old. She never had a bank account. She never had a credit card. She never had a debit card. She paid everything in cash, and being reared with a mother who paid everything in cash, not only did we pay it in cash, we didn't mail anything. We had to go on the day that we made payment to the utility company and put that cash across the counter. So don't tell me anything about not being able to use cash in this country. You're absolutely right. That dollar is solid. It is king. With that, there we go. Is there further discussion of our amendment to H.R. 4395? If not, the question now occurs on approving the amendment in the nature of a substitute. All those in favor say aye.
Aye.
Those opposed say no.
No.
In the opinion of the chair, the ayes have it, and the amendment in the nature of a substitute is agreed to. The question now occurs on ordering H.R. 4395 as amended to be reported favorably to the House. All those in favor say aye.
Aye.
Those opposed, no.
No.
In the opinion of the chair, the ayes have it. The ayes have it, and H.R. 4395 is agreed to.
Ask for a recorded vote, Madam Chair.
A recorded vote has been requested pursuant to Section C5 of Committee Rule 3. The vote on this question is postponed. And with that, the committee will stand in recess until 10 a.m. tomorrow morning. We will resume consideration of all remaining matters at that time. And I think the votes may have started on the floor already.
Another way to spend a beautiful evening together.
The committee is
That
in
was good. I
recess.
like